Yeah. So we started discussion about our basic concepts what we done yesterday, but there are some more relevant points which are yet to be discussed, which we'll discuss that today, and we'll start discussion about one more fantastic topic named as residential status. But before we begin something, let's once recall what we have done, and then we'll start moving forward. Okay? Chalo, come on. What is section 2.7? We have learned that assessee is a person who is liable to pay tax. And at the same time, we understood that it is also covering a person in respect of whom proceedings are taken for assessment of his income, loss or refund, or any other person in respect of which he is assessable. In respect of which he is assessable. That line has come. Other thing what we had was deemed assessee. Deemed assessee covers agent of non-resident. And the last one what we had was assessee in default. I already told it, it's like a Bharat Ratna award in Income Tax Act where it covers three cases. Number one, person who has not done TDS. Number two, person who has done TDS but not paid to the government. Number three, person who has failed to pay advance tax or tax. Correct? Next. Section 2.9. Assessment year. What assessment year? That's the year in which previous year's income is chargeable to tax. Chargeable to tax. Next, what is section 224? Income. It's an inclusive definition. It directly starts with the word income, includes. There are so many items in that. But one important thing which I told you in the classroom was a terrific point and an amendment made by Finance Act 2015 which makes a lot of sense. That is, exactly, subsidies or grants given by central or state government shall be regarded as income. And that subsidy could be in the nature of kind or it could be in the nature of cash. And it's regarded as income. But if any subsidy is received towards a fixed asset, that value of subsidy should be reduced from the cost of asset. Other words, I repeat again, subsidy or grant which a person gets from central or state government is always regarded as income. But if he gets some subsidy towards an asset, that subsidy what he got will reduce from the cost of asset. Yesterday I gave an example where he is buying an asset worth 10 crores and government gives a subsidy of 3 crores. So he'll record in his books of account asset cost not as 10 crores but as 7 crores. Correct, my dear friends? Come on, next. What is section 231? Person. It starts with the word person, includes individual, HUF, firm, company, AOP, BOI, LLP, local authority, artificial juridical person. Artificial juridical person covers your ICAI, ICSI, what else? Dieties, universities, bar councils, these all are covered under artificial juridical person. Artificial juridical person. Next. What about section 234 and section 3? Section 234 and section 3 together defines what is previous year. Previous year is nothing but the year in which income is earned. Previous is nothing but the year in which income is earned. Chalo, next. What is section 4? Chargeability section. A very important section which says that income earned in previous year is chargeable to tax in assessment year. It's chargeable to tax in assessment year. Next, tell me, sir. But there are 5 exceptions for the basic rule, where in all those 5 cases, income earned in previous year is chargeable to tax in previous year itself. Now let us look at the 5 cases what we have. The first one, section 172, shipping business of non-resident. Then 174, persons leaving India permanently or for long time. 174A, AOP or BOI formed for short duration or purpose. 175, persons likely to transfer property to avoid tax. 176, discontinued business. These points are come to yesterday, my dear friends. Right. Then, my dear friends, we also learned something about gross total income and total income. I told you that we have income classified into 5 heads of income, which is technically called as salaries, house property, PGBP, capital gains, income from other sources. When we add income from all the 5 heads of income, what we get is called gross total income. From the gross total income, we reduce deductions which are given under chapter 6A. There are some deductions which are given. Based on the payments or expenditure what we incur. Based on payment or expenditure what we incur. And there are some deductions given based on the income what we earn. For example, yesterday we have taken one case where section 80TTA, which talks about interest on savings bank account. Interest on savings bank account. It is the nature of income. And is based on what? Income. So what do? First we will take that income of interest on savings bank accounts as income. Then we will take deduction under section 80TTA, which is nothing but interest or 10,000, whichever is lower. Correct, my dear friends? Next. Next, my dear friends, we discussed about 288A and 288B, which talks about rounding off of income, rounding off of tax. 288A says round off the income to nearest multiple of 10 rupees. 288B says round off tax to nearest multiple of 10 rupees. Correct, sir? Right. Then, my dear friends, I taught you section number 87A also yesterday, where I told that it is nothing but rebate, which is only for resident individuals whose total income does not exceed 5 lakhs. Rebate is nothing but tax payable or 2000, whichever is lower, and that we claim before education cess. Clear? Next, my dear friends, we also discussed the concept with regard to golden rule of income tax. The golden rule of income tax says all revenue receipts are taxable unless they are exempt. All capital receipts are exempt unless they are taxable. Unless they are taxable. Even this point has come to us, my dear friends. Everyone? Alright. Next, sir, we also spoke about difference between capital expenditure and revenue expenditure. What is the exact difference between revenue and capital? I told revenue expenditure is what we incur to maintain an asset. To maintain an asset. Capital expenditure is what we incur to enhance the asset. To enhance the asset. Otherwise, there is an enduring benefit when we incur some capital expenditure. There is an enduring benefit or a long-term benefit when we incur some capital expenditure. Correct, my dear friends? Right. Now, sir, we spoke about the concept of tax rates also yesterday, where we discussed about, we have drawn one simple chart in the classroom where we discussed the tax rate in various cases. For individuals, tax rate is based on clear-cut slab rates, and it's based on age criteria. There are 3 categories there. Number 1 is called normal, number 2 senior, number 3 super senior. Normal covers up to the age of 59. 60 and above up to 79 is covered in senior citizen. 80 and above is covered in super senior citizen. 80 and above is covered in super senior citizen. Normal, how much it is? Up to 2.5 lakhs, nil. 2.5 to 5, 10%. 5 to 10, 20%. Above 10, 30%. Senior, up to 5 lakhs, nil. 5 lakhs is nil for super senior citizen. Senior, up to 3 lakhs, nil. 3 to 5, 10%. 5 to 10, 20%. Above 10, 30%. Super senior, up to 5 lakhs, nil. 5 to 10, 20%, above 10, 30%. Otherwise, there is no 10% category for super senior citizen. And logically, there is no concept of claiming rebate for super senior citizen. Because anyways, for him, 5 lakhs is nil. Correct, friends? Next. What are the tax rate for partnership firms? 30%. LLPs? 30%. Local authority? 30%. Foreign partnership firm? 30% only. Partnership firm, whether Indian or foreign, it is always 30%. Next, company, domestic company, 30%. Foreign company, 40%. Corporate society, up to 10,000, 10%. 10,000 to 20,000, 20%. About 20,000, 30%. We had this, friends. Next. And education said 3% will apply in all the classes. And surcharge will apply when income is more than 1 crore. And for other than company, where income is more than 1 crore, direct flat rate of 12%. There is no discussion called more than 1 crore, less than 10 crore, more than 10 crores and all. But in case of company, we classify the company into Indian company and foreign company. If Indian company total income is more than 1 crore, but less than or equal to 10 crores, it is 7%. If it is more than 10 crores, it will be 12%. It will be 12%. Foreign company more than 1 crore, less than or equal to 10 crores, it is 2%. More than 10 crores, it is 5%. So rates of surcharge is different for domestic company, different for foreign company, and in rest all cases, if it is more than 1 crore, direct 12% without any discussions. Are we clear with the concept? Everybody, sir? Does the point make sense perfectly? All of us? Sure, next. Now, my dear friends, let me tell you something very interesting concept. In fact, this concept is coming in exam sometimes, which we have not covered in the previous session. Let's discuss that now. Please concentrate. Friends, if there is a company X Limited, let us say, let us take 2 situations. Situation 1, income is equal to 1 crore. Situation 2, income is equal to 1 crore 1 lakh. Situation 1, income how much, sir? 1 crore. Situation 2, how much income, my dear friends? 1 crore, 1 lakh. Now please tell me, in situation 1, if income is 1 crore, what will be the tax, sir? Tax is nothing but 30 lakhs. Cess and all we'll add later. Cess and all we'll add later. Now tell me, here what will be the tax? 30 lakhs, 30,000. Moreover, you'd also have something called surcharge at the rate of 7%. Assuming this is a DECO. DECO means? Domestic company. If it is FCO, it becomes 2%. Correct, friends? Chalo, tell me how much it is 7%. 2,12,100? Yes. 2,12,100. Total comes to 32,42,100. 32,42,100. Now please tell me, sir, if income would have been 1 crore, what would have been tax? 30 lakhs. If income is 1 crore 1 lakh, your tax has become 32,42,100. Correct, my dear friends? Now you tell me, if you observe in situation 1, situation 2 properly, what is the difference in income? 1 lakh. Means in situation 1, income was 1 crore. Situation 2, income is 1 crore 1 lakh. Net effect, in the other situation, you got extra income only 1 lakh. Agree to my point? See here now. Tax here is 30 lakhs. Tax here is 32,42,100. What is the difference in tax? 2,42,100. What a sudden surprise is this? You got extra income as 1 lakh and you are ending up paying the tax of 2,42,100. Cess we are not taking into account, because cess will take into account after we calculate what is the tax. Because cess will come anyways in that case also, this case also. Correct, my dear friends? Now please observe here. My income was 1 crore, tax was 30 lakhs. Fine, no issues. But when my income is 1 crore 1 lakh, my tax has become 32,42,100. In other words, if my income has gone beyond that, it has surpassed that limit of surcharge. It has gone beyond that limit of surcharge, and I ended up paying an extra tax of 2,42,100. Assessee is literally crying, literally in tears, heartbroken completely. He is telling, I don't mind paying tax in India, but my only concern is that, okay, I'll pay tax, but tell me, if I earn some 1 lakh, if you ask me 30,000, I'm paying no. 30% if you ask, I'm paying. I'm keeping quiet. Genuinely accepting as a citizen of India, I'm paying whatever tax you're asking. But if I earn 1 lakh extra, if you ask 2,42,100, from where I should pay? What nonsense, what hell is that? Then government told, oh, don't cry. We'll manage something for you. We'll do something for you. Government has asked the assessee, how much extra you earned? Assessee told, 1 lakh. Then government has asked, are you ready to pay tax? Assessee told, yes, I'm ready to pay tax, but I'm not ready to pay the tax. Then what income I earned? I got only 1 lakh income and are asking me to pay 2,42,100, which is absolutely ridiculous, is what he is telling. Correct, my dear friends? Please concentrate. Assessee is telling, when I got 1 crore, you told me to pay 30 lakhs. If I get 1 crore 1 lakh, you are asking me to pay 32,42,100. How far is genuinely correct when you are asking me to pay extra than what I earned? From where I should pay? If I earn something, if you tell me pay tax, I will think that I am in India, I have no choice, I'll pay tax. I have no choice, I'll pay tax. I'm in India, I have no choice, I'll pay tax. But my dear friends, when an assessee is asked to pay a tax beyond what he has earned, when an assessee is asked to pay tax beyond what he has earned, he will definitely feel bad for a simple reason, because he's ending up paying more than what he has earned. So government thought, okay, let us cover this kind of cases. And they introduced one wonderful concept which is a great benefit to the assessee, which is called as marginal relief. Where they told, we'll give something called marginal relief. Marginal relief, what they told they'll give is, marginal relief they told they'll give, that is difference in tax minus difference in income, which is equal to 1,42,100. This you can reduce from your tax. And this, if you reduce from here, your income becomes, your tax becomes how much, sir? 31 lakhs. Net effect, government is telling like this. How much extra income you earn? 1 lakh. How much extra tax you are paying? 2,42,100. Do one thing. Your problem is what? You don't want to pay extra tax than your income. You don't want to pay extra tax than your income. How much you have earned extra? 1 lakh. Do one thing. Entire 1 lakh you pay as tax. Do one thing. Entire 1 lakh you pay as tax. don't pay that extra 1,42,100. Are we understanding, friends? Government is telling extra you earned 1 lakh. That 1 lakh you pay as tax. Don't pay that extra 1,42,100. Then assessee asked one question. Are 1 lakh I earned. You are telling pay entire 1 lakh. What is the benefit you are giving then? Then government told, I am not giving any benefit to you, but I am reducing the extra loss for you. So other words, in Hindi literature, the answer is that फायदा इतना ही है कि नुकसान नहीं है. Simple answer. Correct, my dear friends? So government is telling end of the day that the only benefit what we are trying to give you is that we are not charging extra tax than your income. We are not charging extra tax than your income. Are we getting it, sir? So other words, sir, this concept of marginal relief will apply only in those cases where income has slightly crossed beyond the limit of surcharge. Now if I have to put in words, marginal relief means in a situation where extra tax is more than extra income. A situation where what, sir? Extra tax is more than extra income because of surcharge. The difference between extra tax and extra income. I repeat again, difference between extra tax and extra income is allowed as marginal relief. Is allowed as marginal relief. I repeat once again for all benefit, please listen carefully. In a situation where extra tax is more than extra income because of surcharge, the difference between extra tax and extra income is allowed as marginal relief. Are we clear with this? Everybody, sir? Totally. For more clarity, sir, for more clarity, I'll take one more example. Let's take a case where it is 1 crore and 1 crore 5 lakhs. 1 crore and 1 crore 5 lakhs. If it is 1 crore, what is the tax? 30 lakhs. If it is 1 crore 5 lakhs, it will come to 31 lakhs 50,000. Then surcharge at 7%. How much it will be? Tell me, please. 2,20,500. Please tell me the total. 33,70,500. Tell me, friends, what is the difference between these two? 5 lakhs. What is the difference between these two? 3,70,500. You tell me now, is the extra tax more than extra income? You extra and 5 lakhs. Extra how much you are paying? 3,70,000. Am I asking you to pay extra than what you have earned? No. Is your extra tax more than extra income? No. Answer is no marginal relief. Other words, in a nutshell, in a summary manner, if you take it under an umbrella, the answer is that marginal relief will come in a case, only in a case where extra tax is more than extra income because of surcharge. Because of what, sir? Surcharge. But if I take a case of 1 crore, 1 crore 5 lakhs, my extra tax is not more than extra income. So definitely marginal relief will not come. So we have to compare the cases like this when a question comes in the exam. But how do we exactly know when marginal relief will come, when marginal relief will not come? So I suggest my students always, when the income is within the range of 1 crore to 1 crore 10 lakhs, my suggestion always, if the income is between 1 crore to 1 crore 10 lakhs, you always check whether marginal relief will come or not. How do you check? By doing this activity. Are we clear with this? But if income goes beyond 1 crore 10 lakhs, it will never, marginal relief will never come. Logically, because marginal relief will come only when extra income is slightly beyond the limit of surcharge. Slightly beyond the limit of surcharge means you are slightly beyond the limit of 1 crore. Slightly beyond the limit of 1 crore. Does it make sense, friends? Everybody clear with the concept? Completely, friends. Speak out something. Chalo, come on. So marginal relief is a case where when extra tax is more than extra income because of surcharge, government is giving a benefit where extra tax minus extra income is allowed as marginal relief. That's all. Clear? Yeah. One student is asking, sir, what will be the case when it is slightly going more than 10 crores? Even in that case, it will definitely come. For a simple reason, sir, if it is 10 crores, let me take DECO, 10 crores, and if it is 10 crores, 1 lakh. If it is 10 crores, what will be the tax? 3 crores. And you'll also add surcharge at what rate? 7%. Correct, no? How much it comes to? 3.21 crores. Very simple. Say something. If it is 10 crores 1 lakh, what will it be? 3 crores 30,000. Correct, no? 3 crores 30,000. To that we will add surcharge at what rate? 12%. Yes or no, sir? Say something. How much it comes to? Please tell me. 3 crores? 3 crores 36 lakhs? 3 crores 36 lakhs 3,600. Correct, sir? Now tell me, sir. Please tell me. Sir, please, I'm telling this for you. What is the difference between these two? 1 lakh. What is the difference between these two? It comes to 15 lakhs. Let me write this way. 15 lakhs 30,600. Is the extra tax more than extra income? Yes. My marginal relief will come to this minus this. How much it is? 14 lakhs 30,600. That's all. Got the answer? So net effect, in every case marginal relief will come where extra tax is going beyond extra income because of surcharge. That's all. Clear? Done. That's about the concept of marginal relief. Sometimes in exam question is coming on, what is the concept of marginal relief? Generally they don't ask theory question, but they're more focused towards a problem like this where they expect students to know what does marginal relief actually mean. Okay guys? Everyone? Come on, next. Friends, yesterday when we discussed tax rates, there are a couple of more points to be learnt in tax rates which we'll discuss that will end up our basic concepts which I'll tell you now. Please concentrate. Friends, there is one section named as section 115 BBE which says that if there is any income or any expenditure or any investment, if there is any income or if there is any expenditure or if there is any investments which are unexplained. What, sir? Unexplained. For example, in a P&L account there is an expenditure to miscellaneous expenses 10 lakhs. As the government is asking, what is that miscellaneous? As is telling, miscellaneous. Government is asking, 10 lakhs miscellaneous? As is telling, yeah, 10 lakhs miscellaneous. Government is telling, it is called unexplained expenditure. When you tell 1,000, 2,000, it can be unexplained. How can 10 lakhs be unexplained, sir? 1,000, 2,000 without knowing you'll incur. Fine. But how can 10 lakhs what you incur, you don't know what is it? How can that be called miscellaneous? Correct, my dear friends? Everyone? Other situation where there is one necklace in SS's house. Necklace worth 30 lakhs. Government is asking, where from you got 30 lakhs to buy this necklace? You are a fellow who is earning 3 lakhs in a year. You got a necklace worth 30 lakhs. Where from you got money to buy? He told, from somewhere. Somewhere means? From where? From where? He is telling. Somewhere. Hurry. Kya hai? Somewhere kya hai? Government will call it as, what they will call it as? Unexplained. Unexplained. Getting it, friends? If there is unexplained income, unexplained expenditure, unexplained investments, act as told, it is taxed at the rate of 30% flat under section 115 BBE and no deduction whatsoever. I'm writing very clearly, no deduction whatsoever. What does that mean? Assessee is telling, you are telling tax, no? I will pay LIC premium, that 1 lakh I'll reduce, on balance I'll pay. That means, let us say he has got unexplained income of 30 lakhs. Government is telling 30 lakhs tax at 30%. He is telling, out of 30 lakhs, 1 lakh I'll take LIC policy and pay LIC premium, take ATC deduction. Government is telling, from these kind of incomes, you cannot take any deduction whatsoever. And they are taxed at a flat rate of 30%. Flat what rate, sir? 30%. Under which section? 115 BBE. Clear with this? Everyone? Speak out something. Yes, come on. Done? Sure. And now we have 2-3 more tax rates, sir, which we have to learn. Let's look at that 2-3 more tax rates. Number 1, we have for casual incomes. Casual income covers yours lotteries, betting, crossword puzzles, card games, TV shows, bumper draws, lucky draws, or your KBC. All this will come under game shows, TV shows, all this come under casual incomes. They are lotteries and all, etc. They are taxed at a flat rate of 30% as per section 115 BB. As per section, which section? 115 BB. Are you getting this? Everyone? Yeah? Now. The other side of the story, sir, we have something called as capital gains. Capital gains is nothing but what we get on sale of an asset. What we get on sale of an asset. And for the sake of taxability, capital gains is always classified into long-term capital gains and short-term capital gains. In that internally, there are a couple of important points to be understood there. Please concentrate. Long-term capital gains, normally they are taxed at 20%. They're taxed at 20% as per section 112. As per section 112. And for information, sir, long term and short term is classified based on number of days you hold the asset. In depth, we'll again talk in a chapter called income from capital gains. Income from capital gains. Okay, guys. Now, if it is long term capital gains, taxed 20% with section 112. I already told you in the previous session that section numbers, if you recollect, it is well and good. It will add more value to your paper. That's what I told you. To the extent possible, try to recollect. And I'll revise, summarize like anything. Okay, next. Other side of the story, sir. If there is a long-term capital gain, on sale of equity shares, sale of what, sir? Equity shares or units of equity-oriented mutual fund. Equity-oriented mutual fund. Now, what do you mean by equity-oriented mutual fund? Sir, mutual fund is nothing but a collective investment scheme where all people will come and put the money at one place, and that fellow who is acting as fund manager will invest at the right places. Otherwise, he is a person who has talent but no money. There are people who has money but they don't have talent where to put. So the person who's having talent is calling the people who is having money, telling, you bring money to me, I'll put in the market, I'll get you returns. If there's a loss, don't ask me, because mutual fund are subject to market risk. Correct, sir? See now. Sale of equity shares or units of what? Equity oriented mutual fund. I'll just draw one line here. Please see here. Equity oriented mutual fund means mutual fund which invest at least 65% in equity shares. In equity shares of domestic company. Means what? Indian company. A fund which invests at least 65% in what, sir? Equity shares of domestic company. We call it as what fund? Equity oriented mutual fund. Okay, guys? See now. Sale of equity shares or units of equity oriented mutual fund. Or equity oriented mutual fund through recognized stock exchange. Through what are we selling? Recognized stock exchange. Recognized stock exchange, what we have in India are BSE and NSE. Through recognized stock exchange on which STT is paid. Whenever we sell through stock exchange, it is mandatory that we have to pay STT. Securities Transaction Tax is mandatory to be paid. There is no choice also. It is mandatory. In fact, it is nothing called you have to pay. In fact, the concept is that when you do a transaction, stock exchange will deduct that STT, balance they'll give it to you. There is no logic called you have to pay. There is no option left there. Getting it, friends? Everyone? So long-term capital gain on sale of equity shares or units of equity-oriented mutual fund through recognized stock exchange on which what is paid? STT is paid. That is, my dear friends, exempt under section 1038. There is one section called section 1038 which says that long-term capital gain on sale of equity shares or units of what? Equity-oriented mutual fund through recognized stock exchange on which what is paid? STT is paid, is exempt under section 1038. Does the point make sense? Everybody, sir? Normally, long-term capital gains are taxed at 20% only. Now at 20% only. Flat rate 20%. But if it is on sale of equity shares or units of equity-oriented mutual fund through recognized stock exchange on which STT is paid, then it is exempt under which section? 1038. Make sense? Now, same situation, sir. Let me take a short-term capital gains. Same situation. Sale of equity shares. Sale of what, sir? Equity shares. Or units of equity-oriented mutual fund. Same language. See, my language is absolutely same. Through recognized stock exchange. STT paid. STT paid. That is taxable at the rate of 15% under section 111A. Same situation. I repeat again, same situation, but if it is long term, it is exempt under section 1038. If it is short term, it is taxable at the rate of 15% under section 111A. Other words, 111A. Making sense, sir? Everyone, these points will come back once again for us in income from capital gains. These are very, very important. Please be focused. Clear, guys? If it is not that short-term capital gains, others will be there. Others will be taxed at normal rate. Please observe, I am not using the word slab rate. I am using the word normal rate. Why normal rate? If it is a company, what is normal rate? 30%. If it is a firm, what is normal rate? 30%. If it is individual, first category, what is normal rate? 2.5 lakhs nil and all. If it is senior, 3 lakhs nil and all. Correct, my dear friends? Normal rate. Are we getting this? So if I have to summarize this table, what I have drawn, this table basically has 3 parameters in that. Number 1, lotteries, cashier incomes and all, tax at what rate? 30%, which is given 115 BB. 115 BB. If it is capital gains, we have 2 categories, long term and short term. If it is long term, normally what rate we tax? 20%. As per section 1112. And if there is a long term capital gain on sale of equity shares or units of equity oriented mutual fund through recognized stock exchange on which STT is paid, it is exempt under section 1038. Same situation, I repeat again, same situation. If it is not long but short, it will become taxable at the rate of 15% under section 111A. Other short-term capital gains are taxed at normal rate. Are we clear with this? Everybody, sir? Sure. Next, friends. There are 2 small sections. In fact, I'll just teach you that for simple reason, because you must know what is it. For that reason, I'll teach you. Because one time exam question has come for 2 marks. What is the meaning of that? What is the meaning of this? Small section but still important sections. We still can't take chances. Okay, guys? So, section 210, which talks about average rate of tax, which is very simple. It says average rate of tax means tax divided by income into 100. Otherwise, we are just trying to figure out what is the average rate. Correct, my dear friends? There is one more section named as 229C, which talks about MMR. Nothing but maximum marginal rate. Maximum marginal rate. Maximum marginal rate means highest rate of income tax. Normally the highest rate of income tax what we have is 30%. I do agree, student is telling, sir, we have 40%. But that 40% is a special case only and only for foreign companies. But normally for Indians and all, what is the highest rate? 30%. So we regard the highest rate always as 30%. Of course, we do have surcharge in case limit is crossed, and we always have education cess, but the basic rate is 30%. Makes sense, guys? Everybody, friends, clear with this concept? Friends, it is not that this crash course or revision batch is only meant for learning 2-3, as I already told you in the previous session, that is not that only some 4-5 points we learn and tell the batch is over for you, batch is over for me. That is not the way things has to work. I'll assure you and I promise you, you will definitely learn equally good like what you have learned in regular batch. In your normal regular batch coaching, wherever you have taken, I'm definitely confident, definitely sure, and I'll definitely give the same output, something more but nothing less. Everything will be covered. All the concepts will be covered. But just that number of problems we solve will be less because revision batch, crash course. That's the straight answer. Okay, guys? Come on. Let us summarize once all the sections what we have learned. Chalo. What is 27? 29. 210, just now I told average rate of tax. Just now we covered. Next. 224. 231. Person includes. Very good. 234. Previous year. Section 3. Section 4. I am sure I told you one section called 225A. Did we discuss that whole story? Territory, territorial waters, continental shelf and exclusive economic zone, soil under the water and airspace above territory and territorial waters. Did we discuss that? Right. Next, section 172, shipping business of non-resident. 174, persons leaving India permanently or for long time. 174A, AOP or BOI formed for short duration or purpose. 175, persons likely to transfer property to avoid tax. 176, discontinued business. Learn this? 87A, rebate. Only for resident individuals whose total income does not exceed 5 lakhs. Rebate is nothing but tax payable or 2000, whichever is lower. That we claim before education cess. What is 28A? Rounding off of income. 28B, rounding off of tax. Section 112, long-term capital gains, 20%. Just we have seen that. 111A, short-term capital gain on sale of equity shares or units of equity-oriented mutual fund through stock exchange on which STT is paid. Tax at what rate? 15%. 115BB, cash and income, what rate? 30%. 115BBE, unexplained income, unexplained investments, unexplained expenditures. Tax at what rate? So observe, this is 20%, this is 15%, and these two are 30%. Flat rate without any deductions whatsoever. Are we clear with this? Everybody, sir? Speak out something. Chalo. Friends, I'm not sure that everyone has got the books or not, but there are a couple of questions which I gave in the book. Let's see that once. In fact, I'll open for your benefit for today. Whoever have the books, they can look at the books. Who are already having the books, they can look at the books. Who are not having, kindly look at the board, please. Friends, there are 2-3 important questions which I gave you so as to make you understand as to what kind of questions can come in the exam. The first question is, explain the concept of marginal relief under Income Tax Act. Did you speak about this? This question has come in November 2008 for 4 marks in the exam. 4 marks in the exam. You have to answer that question with an example in the exam. You have to answer that question with an example in the exam. Only then it makes sense. If you don't give example, directly write words, he will think you copied. If you only write example, he will think you know only to write numbers but not to write words. Write the concept with what? Numbers. Make sense? Now, explain previous year for undisclosed source of income. Sometime back I told you for unexplained income, unexplained investments, they are all taxed at what? 30%. Under which section? 115BBE. But logically tell me one point, when government will tax that? When government will get to know that there is income? Other words, the law says it will be taxed in the previous year of discovery. Other words, when government got to know. Correct? No, sir. So discovery is different, invention is different. Don't write previous year of invention, previous year of discovery. Discovery means finding out something which is already there. Inventing means finding a new thing. Thomas Alva Edison. Invented or discovered? Invented. What? Bulb. Very good. Columbus. Students are thinking, who is this fellow Columbus? Discovered. What? America. Students are thinking, Arey sir, what happened suddenly? I hope you got it. Yeah? Come on. Let me look at one small question. See that, sir. Gross total income of Mr. X. Gross total income of X. A resident age 30 years. For previous year 15-16 comprises of salary how much, sir? 5,05,000. And interest on savings bank 8,000. We all know that when there is interest on savings bank, what do we do? First we'll treat it as income. Then we'll take deduction. Correct, sir? Now, compute his tax liability for 16-17, assuming he has deposited 50,000 in public provident fund. Friends, when we deposit money in public provident fund or we deposit money in LIC premium and all, we can take deduction under section 80C, and these all deductions are given under chapter 6A. In exam when we write, that word should come called chapter 6A, and for information 6A is not number 6, it is Roman 6. Never ever commit that mistake. I was so shocked when I was correcting papers, some students wrote number 6A. Number 6A. And ICA regulation says, if you write number 6A, marks should not be given to the student. Because chapters will never have numbers. Chapter will always start with Romans. Internal sections will have numbers. Correct, friends? Everybody, sir? Small things, but they prove very costly, sir. For example, sir, let me take a small example. 56-7. This is how it looks. This is a section for concept of gift. 56 section, subsection 2, clause 7. Correct, sir? Student wrote in the exam like this. 56 to, wait a second, I'll show his talent, 7. What nonsense is that? Class will never be number. Class will be always in your small Romans. Subsection and section will be in your numbers. Small things, but they prove very costly. Marks will not be given if you write like this. No marks, nothing. Please. Small things, but they prove very, very costly. Be very careful, my dear friends. Chalo. Let us see this portion now. What is the income he has got? Salary. How much salary he has got? 5,05,000. Interest, how much he got? What total he has got? 5,13,000. From this he will take deduction. Under chapter 6a, we should always write first chapter 6a and only then write down the story of section numbers. Please never ever directly write section number. What do we have first one? 80C we have 50,000. What he has put in provident fund? 80 TTA we have savings bank account 8,000 because it is interest or 10,000, whichever is lower. Correct, sir? Say something. If I reduce that 8,000, figure comes to 4,55,000. If my income is 4,55,000, tell me one interesting point. Can I claim rebate? Can I claim rebate? Because I told in order to claim rebate, total income must not exceed 5 lakhs. Total income means after deduction, not before deduction. I told this to you already. What will be your tax? Come on, tell me. Up to 2.5 lakhs, nil. Correct, no? 2.5 lakhs, nil. 2.5 to 4.55 at 10%. It comes to how much? 20,500. If I reduce rebate under section 87A, it is how much, sir? Because rebate is tax or 2,000, whichever is lower. Whichever is lower. Balance comes to 18,000. To this we will add education at the rate of 3%. It comes to 18,500. Okay. What is this? 555. Final answer. 19,060. This is rounded off as per section 288B. As per 288A, we round off the income. And as per 288B, we round off the tax to nearest multiple of 10. And I told the last digit is less than 5, previous 10. If the last digit is 5 and above, next 10. We learned that already. Are we clear with this concept? Everybody saw. Does it all make sense? In fact, prima facie, the main things which are important in the first chapter, basic concepts, what we have is something like tax rates, which are very important. Going forward in every chapter, whenever a question of calculation of tax will come, it is purely based on what we learned in the first chapter. So the first chapter basic concepts is very important, especially from the standpoint of tax rates. And some important amendments what we covered are, number 1, with regard to the cost of subsidy given by government. It's regarded as income. And number 2, the rates of surcharge are changed. That is 7% and 12%. For domestic company, foreign company 2% and 5%. And for others it is what percent? 12%. If income is more than 1 crore. Are we clear with all these things? Everyone, sir? Is all the points very clear for everyone? Pakka? Chalo. Now, friends, when we spoke about section 4 chargeability section, it has one basic line called as income earned in previous year is chargeable to tax in assessment year, subject to some exceptions. What is the first point? Shipping business of non-resident, given by section 172. Now tell me, sir, when I use the word called shipping business of non-resident, section 172, in that there's one clear-cut word called shipping business of non-resident, section 172. Now what does this word actually mean, non-resident, which is very, very vital to be understood. Now non-resident doesn't just mean a foreign fellow. Doesn't just mean a foreign fellow. There is some clear-cut in-depth points in this concept of resident and non-resident which needs to be evaluated properly, which makes a lot of sense. And for information, in income tax law, taxation is not based on citizenship, but it is based on residential status. Citizenship is never a criteria. Citizenship is never a criteria for taxation. What is the criteria? Residential status. How will a person become an Indian citizen if he holds a valid identity proof in India, which could be an Aadhaar card, or it could be an election card, or it could be a passport, some identity proof. Correct, my dear friends? Just because you are born in India, you will not become an Indian citizen unless you have an identity proof. Correct, my dear friends? Everyone? Now, let's say for a second, if a person is in India, he has an election card in India, and he has an Aadhaar card in India, and after that he went to US on some work, and since the work was wonderful, since the salary was very big, he stayed back in US for a very long time, and after 10 years of stay in US, he got a green card in US. Okay guys, he got a green card in US. So at that moment of time, when he got green card, already his Aadhaar card is not cancelled, it is still as it is. So technically he is a citizen of India, he is also a citizen of US, but that is not the criteria at all for determining taxability in income tax. Taxability in income tax is purely based on residential status. It is absolutely not based on citizenship. Are we getting it, sir? And the criteria for residential status is different for different assessees. For individuals it is different, for HUF it is different, for companies it is different, for others it is different. Are we clear with this point? Everybody, sir? This is one of the very, very important topic because, sir, one small point, sir. When we talk about income tax, unless we know who is taxable, there is no sense in calculating tax. Unless we know who is a resident, unless we know who is a non-resident, there is no sense in learning anything about PGEP, capital gains, other sources. It is ridiculous to learn any heads of income directly without learning residential status. And frankly speaking, it's an open fact. For a simple reason, a residential status only will first tell you who is taxable on what. If it's taxable, then how do we calculate heads of income? But first of all, you should know who's taxable and who's not taxable, no? Without knowing that, what will you learn? How do you calculate tax? First of all, please learn who's taxable, who's not taxable. Then it makes sense to learn as to how do we tax that income? How do we calculate that income? Are we getting it, friends? So let's now focus on this topic called residential status. Please concentrate. I'll prepare a small chart and a summary chart. Please concentrate, sir. Friends, when we talk about residential status, and there are a couple of important amendments which are made by law in this specific topic, which are very important. We'll discuss in detail. Please focus. When we talk about this topic called residential status, for the purpose of residential status, we classify persons into 4 categories. Persons means who are governed with section 231. There are individual HUF, AOP, BOI, firm, company and all. But for residential status, we classify them into 4 categories. Number 1 is called individual. Number 2 is called HUF. Number 3 is called company. Number 4 is called others. Others means? Others covers what? AOP, BOI, firm, AJP, everybody. Other than these 3 people. Correct, my dear friends? For individual, it is governed by section 6.1 and section 6.6. 6.1 talks about some basic conditions. 6.6 talk about some additional conditions. What is basic, what is additional, we'll discuss a little bit in detail because there are some important points to be learned there. Next. HUF, it is given by 6.2 and 6.6. Where 6.2 is basic condition, 6.6 is additional conditions. Company is governed by section 6.3, and there's nothing called basic and additional. There's nothing called basic and additional. And AOP BOI firm is governed by 6.2 and 6.4, and both together is only basic. 6.2 and 6.6 together is basic. There's nothing called basic and additional. There's nothing called basic and additional. We have only basic conditions. Are we getting this, friends? Chalo, come on. What are the 4 categories we classify the people for purpose of residential status? Individual, HUF, company, others. Individual is governed with section 6.1 and 6.6. 6.1 talks about basic condition. 6.6 talks about additional condition. HUF is governed by 6.2 and 6.6. Company is governed by 6.3. Others, that is AOP, BOI, firm, are governed by 6.2 and 6.4. 6.2 and 6.4. Are we getting this point, sir? Everybody, friends? And one important point, sir, we have to check residential status for every previous year. That means what? In 1 year, if a person is a resident, doesn't mean next year also is a resident. Every year we have to check whether conditions are satisfied or not. Correct, my dear friends? Everybody, sir? There are two important points I'm telling, please concentrate. Number one, residential data has to be checked for every year separately. Number one. Number two, residential data has to be checked for every person separately, and it is independent. And it is independent. When I use the word independent, what does that mean? If my wife is a resident, doesn't mean I'm a resident. If I'm a resident, doesn't mean she is a resident. As per income tax law, every SSC is a different. Husband and wife are also different. Everybody is separate for income tax purpose only. Are we clear, friends? Everybody, sir? So one line is that status of one person will not affect the status of other person. When I say status, I am referring to residential status. Getting it, friends? You don't think something else. Come on. Are we clear with this point? Everyone? Let's now focus on the first very important concept with regard to individual. There is tremendous concept in this, and some terrific points are there, and there are a couple of notifications given by CBDT which are important. Let's focus on that. Okay, guys, please see this. Friends, individual. When we talk about individual, for individual, a residential status is clearly based on stay in India. Stay in India means physically present in India, not virtually. Physically present in India. Physically present in India. Okay, guys, please see. Physically present in India. When I use the word India, India means what? 225A. Means even though he's in territorial water also, we'll still say he's in India. He's sitting inside the water also, still we say he's in India. He's roaming in the air, still we say he's in India. Provided that air is above territory and territorial waters. Are we clear, friends? Otherwise, India refers to which section? 225A. See now. Individual. Friends, for individual, we have something called basic conditions, which are given under section 6.1. If we satisfy any one of them or both, then that fellow will be called as resident. That fellow will be called as resident. What do we call him as, sir? Resident. If you don't satisfy any one, means none, we will call him as non-resident. We will call him as non-resident. We will call him as what, sir? Non-resident. I repeat again. There are two basic conditions given by section 6.1. If you satisfy any one or if you satisfy both, I repeat again, if you satisfy any one or if you satisfy both, we call him as resident. If you don't satisfy any one of them, we call the fellow as non-resident. We call the fellow as non-resident. I repeat once again. There are two basic conditions given by law. If you satisfy any one of them or if you satisfy both, we call him as resident. If you satisfy none, we call him as non-resident. Are you getting this language? Everybody, sir? Say something, please. Now, please concentrate. What are the two conditions we have? The two conditions which we have in this very simple format, sir. It says that he must be in India. He must be in India for a period of 182 days or more during previous year. Simple. 182 days or more during previous year. Or second one says he must be in India for a period of 60 days or more during previous year and 365 days or more during 4 years preceding previous year. During 4 years preceding previous year. Preceding previous year. That means what? Let me take a small example. If assessment year, I'll use a different color. If assessment year is 16-17, for your exam, assessment of 16-17 only is applicable. For your exam, AY 16-17 only is applicable. PY is what? 15-16. 4 years before that is what? 14-15, 13-14, 12-13, 11-12. This year, either be for 182 days or more. Okay? This year before how many days? 182 days or more. That is first option. Second option what we have is, sir, second option goes like this. 60 days or more during previous year and last 4 years put together be for greater or equal to 365. Are we getting it, friends? Chalo. What is the first condition? He must be in India for how many days? 182 days or more during the previous year. or he must be in India for a period of 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. When I say he must be in India, he must be physically present in India. Are we clear, friends? How do we physically count? Number of days. Correct, my dear friends? Everyone? Chalo, repeat again. What is the first condition? He must be in India for a period of 182 days or more during the previous year. Or he must be in India for a period of 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. Correct, sir? But there are some important points to be understood here. Please concentrate. Very, very important. Very, very important points. Let us say if a person is there in India, from April 1st, he is in India only. And October 2nd, he left India. October 2nd, he left India. Now, please tell me how many number of days he is in India. How do we calculate? April, how many days? May, July, June, 30, July, August, September, October. Answer is 2 days. Day of coming, day of going is always included. I repeat again. Day of coming and day of going. Otherwise, day of coming and going. Day of coming and going is always what, sir? Included. Is always included. An important point, sir, because this makes a difference. Let us say if that day when he is going is 182nd day, what will happen then? If you don't know that point, you will write 181 and tell non-resident. If you know that point, you will write 182 and tell resident. Your answer will change, no? Once you tell resident, tax will change. Once you tell non-resident, tax will change. Khatam. 1 point gone, everything gone. Everything gone, exam gone. Exam gone, attempt gone. Attempt gone, life gone. That is a problem. So that one day will change your life. So, Chalo. What a basic condition we have. First one. He must be in India for 182 days or more during the previous year. Or he must be in India for 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. Are we clear with this? Everybody, sir? Chalo. I repeat again. He must be in India for how many days? 182 days or more during the previous year. Or he must be in India for a period of 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. Perfect? Now, something very important, please concentrate. Friends, if you observe, we basically have 2 conditions. Number 1, greater or equal to 182. Correct, no? Number 2, greater or equal to 60 and greater or equal to 365. 365 in last 4 years. Speak out something. Now please concentrate. Government has told that in 3 cases, this 60 is going to be substituted by 182. That 60 substituted by 182. Means what does the condition become? Condition becomes 182 or 182 and, sir, what is first condition? 182. Our second one becomes 182 and 365. But if 182 you are there, already you are a resident, then why do you want 365? Then why do you want 365? Sir, I repeat again, that 60 become 182. Now what are the options you have? First one, 182 in previous year. Number 2, 182 in previous year and 365 in last 4 years. If that is the case, if 182 you satisfy, you will become a resident, no? Say something. Other words, in my language I always say, in 3 cases, only first condition will apply. Only first condition will apply. That means what? In order to be resident, he must be in India for how many days? 182 days or more. 60 option is not there. 60 option is not there. You must be in India for how many days, sir? 182 days or more to be called as a resident. He must be in India for 182 days or more to be regarded as a resident. Are we clear with this? Everybody, sir? Speak out something. Chalo. Now consider, sir, the three cases what we have are something really important. Number one talks about Indian citizen. What citizen? Who is an Indian citizen? Who is born in India? No. Who is holding a valid identity proof in India? Correct, sir? See now. Indian citizen leaving India for the purpose of. Wait a second. I'll add one line here. Indian citizen leaving India during previous year. During previous year only he must go out of India. That year he must leave out of India. That year only he must leave out of India. I repeat again, that year only he must leave out of India. Indian citizen leaving India during previous year for the purpose of employment outside India. Employment outside India. Chalo, what first line? Indian citizen leaving India during the previous year for what purpose? Employment outside India. He is going for a job. It could be two cases. Number one, he is not having job in India, going for a job. Number two, having a job in India but going outside for a better job, for a bigger job. Correct, my dear friends? Everyone, sir? Chalo, what first one? Indian citizen leaving India during what, sir? Previous year. For what purpose? Employment outside India. So in this case, we have no option called 60 days. We have only one option called 182. Are you getting this, sir? Everybody, please say something. Second one says, sir, Indian citizen leaving India during previous year as a member of crew. Crew means people who are working in the ship or in the flight. Flight we call it as cabin crew, ship we call it as a ship crew. That's only difference. Who is working during previous year as a member of crew of Indian ship. Crew of what ship? Indian ship. And there's one lot of story about foreign ship which we'll discuss very soon. Very soon we'll discuss. Chalo, see now. What is the first line? Indian citizen leaving India during previous year for what purpose? Employment outside India. Second one, Indian citizen leaving India during previous year as a member of crew of what ship? As a member of crew of Indian ship. As a member of crew of Indian ship. Are you getting this logic, sir? Everyone, sir? As a member of crew of what ship? Indian ship. Number 3, what we have is, sir, Indian citizen or a person of Indian origin. In short, we call it as PIO. Person of Indian origin means he or his parents or his grandparents, any one of them are born in undivided India. Undivided India. If I take a person as X, father, mother, father's father, father's mother, mother's father, mother's mother. If any one of them are born in undivided India, then this X is called as a person of Indian origin. If any of the parents or grandparents were born where? Undivided India, then we call the person as person of what origin? Indian origin. His blood is an Indian blood. Undivided India means what? Before independence. That is before 1947. Correct, my dear friends? Everybody, sir? Sure. What the first point? Indian citizen leaving India during previous year. For what purpose? Employment outside India. Second, Indian citizen leaving India during previous year as a member of crew of an Indian ship. Third, Indian citizen or a person of Indian origin who comes to India. So first two is talking about going outside. Third one is talking about coming to India. Who comes to India for visit during previous year. He is coming for what purpose, sir? Visit during previous year. When I use the word visit, what does visit mean? Visit refers to temporary nature. He is coming for a temporary purpose. Temporary could be 1 day also, 1 month also, 1 year also, 10 years also. Temporary doesn't mean just 1 month, 2 months. It could be how much ever it want, how much ever it is. But the point is that it is temporary. He will definitely go back. He will definitely go back. Are you getting this point, sir? Everyone? Chalo, come on. Let's recall once. What are the basic conditions we have for an individual? he must be in India for a period of 182 days or more during the previous year, or he must be in India for a period of 60 days or more during the previous year, and 365 days or more during 4 years preceding the previous year. Any one, if satisfied, what do we call him? Resident. Both not satisfied, non-resident. And in 3 cases, only first condition will apply but not second condition. Correct? What are 3 cases? Number 1, Indian citizen leaving India during previous year for the purpose of employment outside India. Second, Indian citizen leaving India during previous year as a member of crew of an Indian ship. Stop there. Foreign ship I'll cover very soon. Third one, Indian citizen or a person of Indian origin who comes to India for a visit during previous year. For a visit during previous year. Visit refers to what? Temporary nature. Temporary in nature. Are you getting this, sir? Everybody, my dear friends, speak out something. Pakka. Now. So the point is that if you satisfy any one, we call him as resident. If you don't satisfy any one, we call him as non-resident. Why are we classifying? Because taxation of non-resident is different, taxation of resident is different, which we have to learn carefully. And it's very important. Okay, guys? Now please see, please focus. Something important I'll tell you. Friends, when we take in concept of foreign ship, what is a foreign ship? It's nothing but a ship registered outside India. Sir, like how for a bike and car, we have registration. In the same way, when ship also we have registration. There is an act called Merchant Shipping Act. Economic registration is done. For your vehicle, registration is done. Why? Motor Vehicles Act. For every registration of anything, there is an act. Patent. If you want to register anything, you have to get it registered. Everything, whatever you use, you are getting it registered. Brand, registered. So when you register, you get a number or not? Right. If it registered in India, what do we call it? Indian ship. Outside India, what do we call it? Foreign ship. Now, we also find people or crew who are working in foreign ship also. Correct, my dear friends? Now, an important concept. Please concentrate. Friends, when there are people who are working as a crew on the foreign ship, foreign ship is basically, they do transit like this. India to outside India, or outside India to India. If it is within that country, it is not called, we will not treat it for this purpose. If it is within India, we will not consider this for this purpose. We will consider only when transit is from India to outside India, or outside India to India. Transit should be between one country to other country. Origin is in one country, destination is in another country. This is very important concept. Please concentrate. First time you are listening, please concentrate. Very important. Now, for a crew of a foreign ship, so when a foreign ship is coming to India, it is not that ship will go like a steamer. Ship will never go like a steamer boat. Ship goes very slow. Ship carries heavy load. Heavy amount of goods are carried. Heavy amount of people are carried. So it is not that it will go very fast. It will go very slow. But the motion will be fast. But the movement will not be so fast. Motion will be very fast, but the movement will not be so fast. And it spends very good amount of time, very good number of days there itself. For example, when we talk about a cruise or we talk about Titanic ship, is it the ship is going very fast and hit the iceberg? No. Ship is actually going slow only. But since that force could not be sustained, ship has broke. Correct, my dear friends? I'm sure most of you have seen a Titanic movie. Yeah. Now the point here is to be understood here is that, please concentrate. So when we talk about India, it covers territory, territorial waters, continental shelf, and exclusive economic zone. Continental shelf, exclusive economic zone is also a part of India. Territorial waters is also part of India. Now it is possible that ship is entering India and it is staying in the territorial waters or continental shelf for a very long period of time. So but the persons who are in the ship are said to be in India only. Speak out, sir. Persons working in the ship are said to be in India only. Say something. Are you getting this concept? So, it is possible for those people who are working in the foreign ship that they end up becoming resident or they end up becoming non-resident because the ship is roaming in what? Territorial waters. And it's coming to India, going to India, coming to India, going out of India, coming to India, going out of India. That's what they keep doing, sir. Say something. Now, there is one important notification which has been brought recently in the month of somewhere September or October. This was brought notification, important notification which is important, which has to be understood properly, which makes a lot of sense. notification clarified something like this. In fact, this notification applicable for your exam. This notification applicable for your exam. Please concentrate. What does the notification say? Notification has given the concept with regard to foreign ship. What they told. Friends, the moment a person joins as a crew of foreign ship, otherwise an employee of foreign ship, he will be given something called identity document. What document? Identity document. It's something like an identity card. Say something. Identity card. Otherwise, this identity document is a normal language what I used. But technical language for this is called as continuous discharge certificate. It is called as continuous discharge certificate. In short, we call it as CDC. It's an important concept. Came recently, but still important. So we have to know it. It's applicable for the exam. Okay, guys, please concentrate. Friends, please focus. This is important. This was not there way back. This has come recently only, so it is important. So we have to know what is it. Okay, guys, please concentrate. I'll tell you in detail what is it. Please concentrate. That's all. When a person is joining as a crew of a foreign ship, he is given an identity document. That identity document is called, technically called as what? Continuous discharge certificate. Correct, my dear friends? Now, law has told when there is a crew of a foreign ship, there is one date of joining the ship. There is one date of joining the ship. There is one date of signing off from the ship. Signing off means what? Leaving the ship. But the word is not used as leaving. The word is used as signing off. The word signing off is the technical language for that crew of foreign ship. So the date of joining is there, date of signing off is there. Or it could be, for example, let me take an example. August he joined, October he signed off. That is a period what he has spent in the ship only. And that is a period where he is holding that identity called as CDC. What is CDC full form? Continuous Discharge Certificate. Correct, sir? Now please see my language. This period shall be excluded. This period shall be excluded for computing number of days in India. That means what? Please concentrate. Very important. Now listen. Now listen, sir. Date of joining the ship till the date of leaving the ship. That period what you are spending in the ship, I repeat again, that period what you are spending in the ship is removed for the purpose of calculating number of days in India, even though that ship is in India. Get my language carefully. Even though that ship is roaming in India, still we will remove that period for calculating number of days in India, because law has told it is very difficult for a person like crew of a foreign ship who is coming, going. He will end up staying in territorial waters. He will end up becoming resident and he will end up paying more tax. He will end up paying more tax, because for income tax law, resident will pay more tax than non-resident. Always. How and all we'll discuss a little bit more later. Okay? So law has told from the date you join the ship and from the date you sign off from the ship, that period what you are spending in the ship shall be excluded for calculating number of days in India, even though the ship is in India. Does it make sense, sir? Everybody, sir, speak out something. Originally, what has happened, I'll tell you. Originally, when the Finance Act 2015 has come, please consider here. Originally, when the Finance Act 2015 has come, whenever Arun Jaitley has presented the budget, he clearly told, in case of a foreign ship, treatment clarity is not being given. For a crew of an Indian ship, we always follow 182 days. We don't follow 60/365. Correct, sir? Arun Jaitley told, for people who are working in the foreign ship, there is no benefit being given. So for them also, we will try to bring a same concept like Indian ship. Same concept like Indian ship. He told, we will try to bring a same concept like Indian ship. And every one of us followed the same concept called, for foreign ship also, same like Indian ship, treating them also as what? 182 days or more. But then, notification has been given recently, in the month of September or October, they gave the notification where they clarified telling, you follow this concept, which is a special concept. And for information, this concept called CDC and all will not apply for Indian ship. The CDC is only for foreign ship. That means, let me correct myself. CDC concept is there for Indian ship. CDC word is there for Indian ship. But this kind of calculation is not there for Indian ship. That means, even the people working in the Indian ship also will get certificate. But this concept of excluding that period will not apply for them. For them, what do we see? 182 days. For foreign ship also we used to see 182 days. But now they clarify telling, don't follow that, please follow this. This has come up recently. Things can change at any point of time. For a simple reason, it's called as tax. Government has a power with them to change anything at any point of time. Are we clear with this, friends? Everybody said, this has come up recently in the month of October. And at the same time, your ICAI has clarified telling that this concept will apply for your exam. ICAI has come up with one recent update on ICAI website where they have told that this will apply for your exam. So you should know. So right now, the concrete evidence is that for an Indian ship, we follow what? 182 days or more. For a foreign ship, they are telling, please follow this concept. What is this concept? From the date you join the ship, from the date you sign up from the ship, that period is what? Excluded. For calculate number of days in India. Are you getting it, sir? Very, very important concept. Please take this. Very important. Shall I read one question for you, sir? Yeah? One guidance book where there's a question here. I'll just read the question for you. Just consider it. Determine residential status of crew member of a ship. Look at the question. Carefully look at the question. Consider it here. In 1516, Mr. Krishna, his name is Krishna, and he is an Indian citizen. He is a vessel manager in Blue Ocean Transit so-and-so company, which operates ship from Cochin to Colombo. Cochin to Colombo. Is it from one country to other country? Yes. Is it an eligible ship? Yes. It does not involve transit of passengers. Okay, wonderful, very good. Now see. Mr. Krishna, working as a crew of a ship, provides following details. Details what he gave is, date entered into CDC for joining the ship, 3rd August. Date 15. Date entered into CDC for signing off, 31st December 2015. And on 1/1, he went back to Cochin. That means what? He is in India only. Correct, my dear friends? Now you tell me, what period you will exclude for calculate number of days is in India? From 3rd Jan to 31st December, he is working on the ship. That period, how much is coming to? 150 or 151? Date of joint relay signing off. How much it is? 151 days. This 151 days, whatever is coming, is excluded for carrying number of days in India. Now the point is that before joining the ship on 3rd August, he was in India only. After leaving the ship, where is he? In India only. So total number of days in a year is 366 leap year. Minus 151 days for which we are spending in the ship. How much it is? 215. Will you be resident? That is the concept. So the date of joining the ship and the date of signing off from the ship is excluded for calculating number of days in India. Are you getting this, sir? Everybody, friends? Chalo. Come on. Whoever are writing, please take it. Very important. I hope this makes sense, sir. Latest point, important. So the question can come in the exam. They'll test you only on the concept of CDC. What is, only one line here. From the date when you join, date when you sign off. That period is what? Excluded. Simple. Clear, friends? And act as only, the notification has only told date of joining the ship till date of signing off is excluded. That means it is silent whether you have to include or exclude. So for practical purpose, what we are doing is date of joining and the date of leaving. We are all both we are including. And some people tell that date of joining you include, but date of signing off don't include. Because that day is coming out, no. Like that they are telling. So end of the day, what we do is better position. Date of joining till date of signing off. Date of signing off, sir. Night 12:30, night 11:30 is signed off. Will you tell that day is not in the ship? How can you tell that way? So the clarity is not given so far. So better position you do is date of joining till date of signing off. Include both the days. That period, it is deemed as if he is not in India, even though that ship is revolving in India. Correct, my dear friends? Even though the ship is revolving in India, still we'll treat as if it is outside India. Are we clear with this concept, sir? Everybody, sir? Latest notification given by whom, sir? CBDT. Yesterday I told CBDT only will give notifications and circulars. Yeah? Clear with this? All of us? Important concept. I'm sure we are clear. Chalo. Let me summarize everything now what we have done so far with regard to residential status. Residential status for individual. We are in individual only. So once we do individual, HUF company, others are very simple. Nothing is there in that. Matter of 2-3 minutes. That's all. Individual is only big thing. Come on. Individual is governed by basic condition 6.1, additional 6.6. Additional I didn't tell you so far. Chalo. Additional is very simple. The logic is all about the basic conditions only. What are basic condition? He must be in India for 182 days or more during the previous year. Or he must be in India for a period of 60 days or more during the previous year and 365 days or more during 4 years preceding the previous year. And in 3 cases, only first will apply but not second. First, Indian citizen leaving India during previous year for the purpose of employment outside India. He must leave India during previous year only. That year only he must go. It is not that he already went in last year, now he is there outside. Please understand my line. It is not that last year he already went, now also he is outside. This year only he must go. This year only he must catch that flight and go. Getting it, sir? Second, Indian citizen leaving India during previous year as a member of crew of what ship? Indian ship. Foreign ship, this is the story now. Changed. Sir, CBDT latest notification. Earlier they told 182 days, but now the story is all about CDC. CDC is what? Continuous discharge certificate. Date of joining till date of signing off. Please don't write in the exam date of leaving. It is date of signing off. Never ever write date of leaving. Small thing but proves costly in the exam. Latest point, so I strongly believe it will come in the exam. Please write. Okay? Date of joining, date of signing off is excluded for calculating number of days is in India. Okay, guys? Now. Third one, Indian citizen or a person of Indian origin who comes to India for a visit during previous year. For a visit during previous year. Are we clear, sir? Everyone? Sure. That's the concept. Sir, tax is such a dynamic subject which keeps changing time in and time out. It keeps changing time in and time out. The problem is that the only concern with the tax subject is that it keeps changing so dynamically that I keep telling my students, never ever share your books of taxation with your juniors or seniors. What you learned will be yours only. It will not apply for your juniors nor your seniors. Simple. For your juniors it will be old Finance Act. For seniors it will be new Finance Act. Straight answer. So we can't take chances. But of course, May and November will remain same. May students can follow now. May students books they can follow November exam, same books they can follow. But November students writing in May, story will change completely. Pura ka pura story will be changed. So you have to be very careful. So the beauty in tax is what you know. The beauty part, I enjoy that most. The beauty in tax is that in accounts, costing, auditing, whatever. Answer will keep on changing year by year because of amendments. Are we clear, friends? Everyone, sir? Sure. So far we are done with basic conditions for individual. Now let us look at additional conditions. Additional conditions are given by section 6.6, where we have 2 additional conditions. Very simple. The first one says he must be a resident. He must be resident in at least 2 out of 10 previous years, preceding previous year, and he must be resident in at least 2 out of 10 previous years preceding the previous year. How will you be resident? By satisfying any one of the basic. How will you be resident? By any one of the basic. 6.1. Correct, sir? and he must be in India. Be in India means physically be in India for a period of 730 days or more during 7 years preceding previous year. He must be in India for a period of 730 days or more during 7 years preceding the previous year. Sir, in some books you will find a different language, but concept will never be different. Concept remains as it is. Books might change, everything may change, but concept will remain forever. Only those three things are important, called concept, concept, concept. Nothing else. Nothing else. When you are perfect with the concept, only then you can play left and right with sections and concept. That's all. Now the concept here is that in your ICA books you will find he must be in India for not less than 729 days. He must be in India for not less than 729 days. That means what? 730 days or more only, no? Another language. He must be non-resident for at least 1 year. And a different language they'll use. He's telling he is not a bad person. That is ICI language. And for your kind information, this is approved by ICI. Marks will come in the exam if you write this language. 100% guaranteed. Okay, guys. In fact, I have been a valuer for papers. I have also been exam paper setter one time. So we have given marks even though this language is there. 100% we will give. Concept is not changed, no. If you write 725, 745, then we will not give. But if the concept is the same, if you write different language, I will not give the marks. Correct, my dear friends? It's in tax, we don't expect you to write exact language. We want the concept, that's all. Exact language required in two subjects called number 1 law, number 2 auditing. There that exact language should come. Other subjects exact language is not mandatory. Your concept is only mandatory. Clear with that, friends? Sure. So friends, in a nutshell what we have is, if I look at assessment year 16-17 and previous year is 15-16, then we have 14-15, 13-14, 12-13, 11-12, 10-11, 9-10, 8-9, 7-8, 6-7, 5-6. That's all. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Perfect. See now, sir. What are conditions we have? If I look at the basic, he must be in India for how many days? 182 days or more during previous year. Or second option, greater or equal to 60 days during previous year, and in last 4 years, 365 days or more. This is basic. This is basic only. And is it and or? Is it and or? Or. That means what? If you satisfy any one, you are resident. If you satisfy both, resident. None, non-resident. Make sense? Next. Friends, additional side, if I look at additional, I write this side with different color. First one says, in the last 10 years, in this last 10 years, and sir, see the language. In this last 7 years, you must be there for 730 days or more. And here the condition is and. Here the condition is or. That means what? Additional both. Basic one, additional one. Then he will be called as resident but not ordinarily resident. What does that mean? Please concentrate. Friends, Act says, if you satisfy any one of the basic, we call you as resident. And if you don't satisfy anyone, we call you as non-resident. Once we trigger one fellow as non-resident, story is done. But if he is resident, we will look at something called additional condition. If you satisfy both additional conditions, we will call him as resident and ordinarily resident. It is not ordinary, it is ordinarily. Ordinarily means generally, usually, normally. That is the meaning. Ordinary means time pass fellow. He is not time pass fellow. He is a generally, usually, normally resident in India. Correct, sir? In short, we call him as ROR. Getting it, friends? Everyone, sir? Speak out something. Make sense, everyone? Yeah? Chalo. What are basic conditions? He must be in India for how many days? 182 days or more during the previous year. Or he must be in India for 60 days or more during previous year. And 365 days or more during 4 years preceding the previous year. And in 3 cases, first one will apply but not second. And additional is what? He must be resident in India in at least 2 out of 10 previous years preceding the previous year. And he must be in India for a period of 730 days or more during 7 years preceding the previous year. Make sense, friends? Everybody clear with the concept? Completely, guys. Come on. Now look at one small story here. In simple language, if I look at basic and additional, basic 1, additional 1, his status will become RNOR. That means resident but not ordinary resident. Basic 2, additional 0, resident and not ordinary resident only. Basic 2, additional 2, we call him as ROR. Basic 1, additional 2, still ROR. Basic nil, additional 2, NR. Other words, in order first to become resident, you must satisfy any one of the basic. If basic only gone, what is the use of additional? Correct, sir? Yes or no, sir? If the basic only gone, what is the use of additional conditions? Say something. Unless you pass CPT, there is no point in sitting in IPCC coaching. Simple. Correct, my dear friends? Are we clear with the concept? Everyone? Chalo. So which section talks about basic condition? 6.1. Additional condition? 6.6. Make sense, everyone? Clear with this concept? Chalo. We'll solve some problems on this very soon. But before that, let me tell you one more small concept which talks about HUF, which is very similar to individual. Very similar to individual. In one small chart, I'll close the story. See this. Basic condition is given by section 6.2, sir, which says that if the control and management, when I use the word control and management, it refers to where decisions are taken. Where decisions are taken. Control and management refers to where decisions are taken. And for my dear friends, there are 2 types of control named as de jure control, de facto control. Some student may be listening to this word for the first time. They might have never heard these words also. Please see this. There are 2 words called, okay, I know that you know, but some students are listening for the first time, I'm sure about it. They would have never heard this in verse lifetime. What is de jure and de facto? They will tell one word. So these are Latin words for sure. Okay, but what is it? De jure and de facto. What is it? Listen please. I know that some students never heard this, but please consider it. De jure control refers to who is supposed to have control. Who is supposed to have control. De facto refers to who is actually controlling. Who is actually controlling. For income tax purpose, de facto is important but not de jure. De jure means who is supposed to have control. De facto is actually controlling. We are only concerned with who is actually controlling but not who is supposed to control. Getting this, sir? For a small example I keep giving, in a family, father is supposed to have control. But end of the day, who controls is only mother. Father is called de jure control, mother is called de facto control. For income tax purpose, what is important is only mother but not father. Practically for us also, I mean, especially for boys, what we see is, especially in my case also, I ask mother only. I directly don't deal with the father, only indirect route. Direct is very risky. Simple. Come on. If the control and management is, control and management means what? Decisions are taken. Control and management is wholly or partly in India. Then we call it as resident. Sir, in individual what do we see? 182, 60 and 365. Here what are we seeing? Control and management. If it is only partly in India, what do we call it? Resident. If the control and management is wholly outside India, we call it as non-resident. If the control and management is wholly or partly in India, we call it as a resident. If the control and management is wholly outside India, we call it as non-resident. Does it make sense, friends? Everybody, sir? If the control and management is wholly or partly in India, it's called resident. It's only outside India, non-resident. Partly, wholly or partly means what? Partly doesn't mean 50-50. If 99% is outside, 1% is inside, still we call it as partly only. Partly never ever means 50-50. Keep that point in mind always. Clear, guys? Now, once non-resident, story is over. Story is over. Once resident, we will look at additional condition, which are going with section 6.6. Same as individual only. Nothing but resident in at least 2 out of 10 previous years and 730 days or more during last 7 years. And in HUF case, this should be satisfied by Karta. Who must satisfy? Karta. If he satisfies both, We call HUF as ROR. Any one or none, we call HUF as RNOR. Simple. Come on, please concentrate. HUF. First, we'll see basic condition. What basic condition? If the control and management is wholly or partly in India, we call it as resident. Wholly outside India, non-resident. If a non-resident, story is done. Resident will be what condition? Additional condition, which are same as individual. But who must satisfy here? Karta will satisfy. If you satisfy both, ROR. Satisfy any one or none, RNOR. And for your kind information, only for individual and HUF, we have a concept called ordinarily resident. For others, there is no concept called ordinary resident. Getting it, friends? Everybody, sir. Speak out something. Now, in a one chart, I'll close other things. Others, sir, if I look at others, we'll split them into two categories. First one, company. The next one, other than company. Other than company means AOP, BOI, firm, AJP, etc. Correct, sir? Very simple chart, sir. Very simple. For firm AOP, beyond all sections are given by 6.2 and 6.4, which says only two lines. Only two lines. If the control and management is wholly or partly. See that language. Control management, WRP means wholly or partly. So WRP means what? Wholly or partly. In India, we call it as resident. If the control and management is wholly outside, what do we call? Non-resident. Same as HUF only. Very simple, sir. Pretty simple actually. Pretty simple. Only individual is only critical. Rest all are very simple. Does it make sense? Everyone? Speak out. Chalo. Other side of the coin. This is slightly important. This is given by section 6.3. Where for company we classify them into two categories. Indian and foreign. Indian is also called as domestic. Domestic company, foreign company. Now, Indian company is always resident. Means once it is registered in India, it is always resident. We are least concerned about where the activity is done, who is controlling, who is managing, who is directing, who is undertaking. Nothing we are concerned. If it is registered in India, it is always what, sir? Resident. Indian company means what? Company is registered in India as per Companies Act 2013, not 1956. Please, we already passed 1956 long back. Clear? Everyone? Next. For foreign companies, sir, we look at something like this. Foreign company, we look at a concept named as POEM. POEM means place of effective management. It is something very similar to control and management. But they have used a word called effective management. You tell me now, sir, effective management in a company is not done in AGM. Effective management in a company is done in board of directors meeting. Correct, no, sir? Who take decisions is only directors. But shareholders only, what do they do? Approve. That's all. Correct, no, sir? Everyone? Now, POEM refers to what, sir? Place of effective management. For a foreign company, if it is wholly in India, what is wholly in India? POEM. POEM is wholly in India. We call it as resident. POEM is wholly or partly. Partly means any percent. It could even be 1%. Need not be 50-50. Sir, I told this point, it need not be 50-50. If it is wholly or partly outside, then we call it as non-resident. Then we call it as non-resident. Friends, one important catch point here. Please observe carefully. In case of HUF, in case of AOP, BOI and all, if the control and management is wholly or partly in India, we call it as resident. For example, if HUF case 99% in India, 1%, okay, let me take a different example. HUF case, 99% outside India, 1% in India. What do we call? Resident. Foreign company case, 99% outside India, 1% in India. Still non-resident. Because for foreign company we resident only when it is wholly in India. Partly we call it as non-resident. HUF, AOP, BOI, partly we call it as resident. For foreign company resident only when it is wholly in India. Does it make sense, sir? For an Indian company, let us say 100% outside India, still it is resident only. 99% outside, 1% in India, still resident only. 50 here, 50 there, resident only. Nothing in, nothing outside India, resident only. End of the day, Indian companies always say resident. Are we getting this, friends? Everybody, sir? Sure. In just 1 minute, I'll summarize whole thing now. Please concentrate. Friends, so for resident status purpose, we classify individual HUF into 3 categories, ROR, RNOR, NR. Others we classify only in 2 categories called R and NR. There is no OR, NR, NOR concept. Now, for individual, we have basic conditions given by section 6.1, additional by 6.6. Basic, anyone, if you satisfy, you'll be called as resident. If you don't satisfy anyone, you are called as non-resident. Story is done. If you're resident, we look at additional conditions, which are given by 6.6. Both satisfied, ROR. Any one satisfied, RNOR. None satisfied, RNOR. And we discussed the story of the 3 exception cases. We discussed story of foreign ship also. We spoke about CDC, continuous discharge certificate. Date of joining and date of signing off shall be excluded for calculated number of days in India. Clear? Now, HUF, it is given by 6.2 and 6.6. 6.2 basic condition. If the control management is wholly or partly in India, resident. Outside India, resident. Additional conditions given by section 6.6, same as individual. Karta will satisfy. Correct? 6.2 and 6.4, AOP, BOI, AJP, firm, everybody else. There it says, if the control and management is wholly or partly in India, resident. Wholly outside India, non-resident. For a company, we have 2 categories given by section 6.3. Indian company, always a resident. Foreign company, it is concerned about poem, not about C&M. The word is not control and management, the word is place of effective management. If it is wholly in India, resident. Wholly outside India, non-resident. Partly outside India, non-resident. That's all. So we have discussed so far the concept of section 6.1 and 6.6, which talks about basic conditions for and additional conditions for individual. 6.2 and 6.6 talks about HUF. 6.2 and 6.4 talks about AOP, BOI, AJP and partnership firms and any other cases. 6.3 talks about company. 6.3 talks about what? Company. Are we clear with all these points, my dear friends? Everyone, sir? So the prima facie important points what we have is, sir, in a simple language, for Indian citizen, what I suggest is only one thing, sir. Some students are asking me doubts in the midway about the concept of ship. In one line answer, originally law always told Indian citizen leaving India as a member of crew of an Indian ship is covered by 182 days, always. But foreign ship was not covered before. Where they have now clarified telling that, for a foreign ship, date of joining the ship and date of signing off from the ship, date of joining the ship and date of signing off from the ship shall be what, sir? Excluded. So date of joining the ship and date of signing off shall be excluded. The balance just only will treat is in India. But Act has not clarified whether we will see 182 or 60 and 365. So, but generally, for the people who are working on the crew of the ship, we always follow 182 only normally what we follow. That's the only logic what we apply. Since already crew of Indian ship always says 182 days, crew of foreign ship, what we take into account, date of joining the ship and date of signing off from the ship shall be what? Excluded for calculating number of days in India. Are we clear with that? Everyone? Come on, what section? 2.7? 2.9? 224? 231? 234? Section 3? Section 4? Chargeability section. Section 174A. AOP or BOI found for short duration or purpose. 225A. 229C. Maximum marginal rate. 210. Average rate of tax. 115 BB. Like lotteries, crossword puzzles. Tax at what rate? 30%. 115 BBE. Unexplained incomes, tax at the rate of 30%. No deduction whatsoever. Perfect. No deduction whatsoever. Are we clear with this points, my dear friends? Everybody, sir? Sure. Now let me teach you something very important, sir. We have learned so far section 6.1 and 6.6 with regard to basic and additional conditions for individual, 6.2 and 6.6 for HUF, 6.2 and 6.4 for the purpose of AOP, BOI, AJP, firm, etc. 6.3 which talks about company. 6.3 which talks about what, sir? Company. This is what we have learned so far. Now please concentrate, sir. Now, my dear friends, for the purpose of taxability, income in India, in Indian income tax law, for the sake of taxability, income is classified into two categories, which is in short called as Indian income, or it is called as foreign income. Indian income or foreign income, which is very important to be understood, because on that basis only taxation is clearly based on. Indian income clearly means income which has accrued. Income which has accrued. Accrued means what? Right to receive. Where will you get the right to receive? Where you have done the activity, where you perform the work, there only you will have right to receive. Correct, my dear friends? Right to receive will be at a place where activity is performed, where work is being done. Correct? Income accrued, or it is received, or deemed to be received, or deemed to accrue or arise in India. Accrue or arise in India. Friends, if the income is accrued, if the income is what? Accrued. If the income is accrued or received or deemed to be received or deemed to accrue or arise in India, we call it as what income? Indian income. Correct, my dear friends? So if the income is accrued or received or deemed to be received or deemed to accrue or arise in India, we call the income as an Indian income. What do we call it as? Indian income. Foreign income means income which has accrued. Income which has accrued. And it is also received in India. If the accrual and receipt both is outside India, then we call it as a foreign income. If accrual or receipt, any one of them or both are in India, then we call it as Indian income. If the accrual or receipt or both are in India, we call it as Indian income. If accrual and receipt both are outside India, we call it as foreign income. We call it what income? Foreign income. I repeat once again, if accrual or receipt, any one of them is in India, or both are in India, we call it as Indian income. Both are outside India, we call it as foreign income. Both outside India, what do we call it? Foreign income. Now, a terrific point to be understood, sir. When I use the word receipt refers to first received. First received. Let's say I took the class, and in the class I earned some 5 lakhs. I told my friend to go and take the 5 lakhs, and then he came and gave it to me. Who has first received? My friend. What he has done from him to me is called not receipt. It is called as remittance. What we always see is first receipt. Getting it, my dear friends? For a small example, if I go to Dubai and I take a class there, and I tell my friend in Dubai, you take the income from there, you take the income of whatever I earned there, you take the income. When you come to India, give it to me. Okay, guys, I told my friend, I'll take the class, I'll come and take the class, you take the income. When you come to India, you give it to me. Tell me now, it's accrued where? Dubai. Receipt where? Dubai only. First receipt where? Dubai. When he is giving it to me, it is not called receipt, it is called as remittance. It is called what, sir? Remittance. What we always see is first receipt, not remittance. We are only concerned with accrual and receipt. If it is accrued or received or deemed to be received or deemed to accrue as in India, then we call it what income? Indian income. If it is accrued as well as received, both are outside India, then we call it as foreign income. Any one of them in India, we call it as Indian income. Accrue means right to receive. Receive means actually received. I repeat again, accrue means right to receive. Receive means actually received. If any one of them are in India or both are in India, we call it as What income? Indian income. If both are outside India, what do we call it? Foreign income. Does it make sense? Everybody, sir? See now. Now, sir, law says something like this. Friends, we basically have three people. ROR, RNOR, NR. Now, the concept what I am teaching is all about section 5, which talks about scope of total income. Which talks about scope of total income. Which talks about scope of total income. Where which three categories we have? ROR, RNOR, NR. What is ROR? Resident and ordinarily resident. We know how to calculate. RNOR, resident but not ordinary resident. NR, non-resident. Correct, my dear friends? ROR is taxable on Indian income as well as foreign income. Otherwise, he is taxable on global income. Means wherever he earns the income, he is taxable in India. If he earns the income in India, if he earns the income outside India, received in India, received outside India, whatever it is, he is taxable in India. He is taxable on global income. But a student can get one doubt. If I go to Dubai, let's say I'm ROR, I go to Dubai, earn some income there, received income there, it's called foreign income. I'm telling you I have to pay tax in India. But my dear friends, when I earn in Dubai, they also will not keep quiet. Correct, my dear friends? Dubai or US, whatever country it is, that country also will not keep quiet. It doesn't mean that we will pay tax in both the countries. We always pay tax only in one country, for which purpose we have a concept named as double tax avoidance agreements. That agreement is there between India with every country, which will tell as to which country is going to collect tax. The agreement is going to tell as to which country is going to collect tax. I repeat again, the agreement will tell as to which country is going to collect tax. Are you getting it, friends? Everybody, sir? The agreement will tell us as to which country is going to collect the tax. Clear with that point? Everyone? Now please see. ROR will tell, ROR is taxable on what income? Indian income and foreign income. And government is telling, you are our person, please pay tax on everything wherever you earn. Otherwise, it's tax on what income? Global income. Non-resident is taxable only on Indian income. What is Indian income? Income which is accrued or received or both is in India. Income which is accrued or received or both is in India. Correct, my dear friends? Everyone, sir? If it is accrued or received or both is in India, what will happen? Our NR will be taxable. Let's say for a small example, sir. When you call a person as NR, if it doesn't satisfy any of the basic condition. If it doesn't satisfy any of the basic condition, we call him as NR. Correct, my dear friends? Let's say for a small example. AB de Villiers, South African cricketer. He is coming to India every year for 30 days. Every year he is coming to India for 30 days. Will you call him as resident? What do you call him? Non-resident. He earns some income in India. You are telling pay tax. He will tell, okay, take the tax because I earned in India only. He will not talk anything. If you tell, AB de Villiers, you earned some income in South Africa. You earned some income in America. Pay tax in India. What he will tell? He will tell, I'll take my spikes and show what I am. Simple answer. For a simple reason, because a non-resident foreign fellow who is not staying in India for 60 days, 65 days and 182 days, you are telling him, you come to India, wherever you are outside India, come to India and pay tax. Why he will pay, sir? Why he will pay, sir? Why you should pay in India? We have no choice. We got born and brought up made in India. There is no choice. But why he will pay? We are Indian products. They are not Indian products. I mean to say, Indian born. Correct, my dear friends? Say something, sir. Chalo. So, ROR is taxed on what income? Global income. Both Indian as well as foreign. NR is taxed on what income? Only Indian income. ROR, global income. That's Indian as well as foreign. NR, only Indian income. Correct, sir? Now, please concentrate. For RNOR. For what, sir? RNOR. There are two parts in this. Two parts. Number one, Indian income taxable. Sir, if you observe in all the three cases, Indian income is taxable. If you observe in all the three cases, Indian income is taxable. So, net effect, if you get Indian income, it is taxable for everybody. Whether you are ROR, RNOR, NR, Indian income becomes what? Taxable. If you are ROR, RNOR, NR, Indian income becomes what, sir? Taxable. If it is foreign income, even that will be taxable, but only in two cases. Only in two cases. Please observe what are the two cases. Number one, it is business income. It is what income? Business income, which is controlled wholly or partly from India. Wholly or partly from India. Partly means any person. It could even be one person. It need not be 50-50. Correct, sir? Everyone? Sure. Tell me now. RR is taxed on what income? Global income. That is both Indian as well as foreign. RNR is taxed on what income? Indian income. Foreign income also taxable, but only in two cases. Number one, business income, control wholly or partly from India. I repeat again, what income? Business income, control wholly or partly from India. Other side, professional income. What income? Professional income. Professional income like chartered accountant, doctor, lawyer, advocate and all. Professional income, if profession is set up in India. I repeat again, profession is what, sir? Set up in India. Friends, when I use the word set up in India refers to having office in India. Having an office in India. Office in India means what? It could even be one room. It could even be one room also. That is also okay. But you must have a setup in India. Setup means what? Office in India. Are we getting it, friends? Everyone, sir? Sure. What are three categories of people we have here? ROR, RNOR, NR. ROR is taxed on what income? Global income. Otherwise, both Indian as well as foreign. He is taxed on both Indian income as well as foreign income. NR, non-resident. Taxed on what income? Only Indian income. NR is taxed only on Indian income. RNOR, Indian income as well as foreign income. Foreign income is taxed only in two cases. If it is business income, controlled wholly or partly from India. Profession income, if profession is set up in India. Correct, sir? Are we all clear with this concept? Completely, my dear friends? Totally, sir? Sure. Now please concentrate. Let me give a small example. Let's say, if I am there, I went to US, rendered some service to my client. Rendered service in US and received $10,000 in US. Okay, sir? Tell me now, accrued where? US. Received where? What kind of income? Is it taxable? You can't tell directly like that. For information, I have an office in India. I have an office in Hyderabad. I have an office in India. Now please tell me, if Shiva is ROR, what will happen? Without any discussion, without any thinking, straight answer, taxable. Because ROR is taxed on what income? Global income. There is no discussion there. Right answer is taxable. If I am NR, answer will be not taxable. Why? Foreign income. For foreign income, we should not touch non-resident at all. Are outside person, outside income, why will you tax him? Correct, sir? If an outside person will you tax for outside income, he will take you inside and bang. Straight answer. Clear, my dear friends? You know, ROR taxable, NR not taxable. RNOR also taxable because it is what income? Professional income. What income? Professional income. And there is an office in India. That means there is a setup in India. Does it make sense, sir? Everybody, friends? Speak out something. Pakka, sir? Let me give one more example. Let's say there's a person, Ramesh. He has one house in UK. He has one house in UK. And there's one tenant in house. His name is Suresh. Ramesh is the owner, Suresh is the tenant. Ramesh gave a house what he has in UK to a tenant, Suresh. Okay? Now, rent is paid by tenant to Ramesh friend, Mr. Naresh. Naresh is who, sir? Ramesh friend. He is also in UK. Tenant is there in UK. He is paying rent to Naresh in UK. Then Naresh is going to India and is giving it to Ramesh. Friends, please concentrate. Sir, Ramesh is an owner who is in India. He has a house in UK. The tenant Suresh. And tenant Suresh is paying rent to Naresh. who's in UK, and then Naresh is going to India and is giving it to the owner. Okay, sir? Tell me now, accrued where? It will accrue at a place where house is situated. Receipt where? We will always look at what receipt? First receipt. What kind of income? Correct? No, sir. Now tell me whether taxable or not. How will you decide? If Ramesh is ROR, without any discussion, I will tell one word called taxable. Ramesh is NR. Ramesh is RNOR. Again, not taxable. Because RNOR we will touch for foreign income only in two cases. Number one, business income, where it is controlled wholly or partly from India. Profession is set up in India, but he got what income? House property income. So obviously we will not tax him. Are we getting it, sir? Everybody, my dear friends, are we all clear with the concept? Completely. Sure. Friends, so if the person is ROR, he is taxable on Indian income as well as foreign income. But if a person is non-resident, we will tax only what income? Indian income. But if a person is RNOR, we will tax Indian income as well as foreign income. But foreign income is taxed only in two cases. Number one, business income, control wholly or partly from India. Profession is set up in India. Make sense, guys? Everybody clear with this concept? Completely, sir. Sure. Now please listen. Something interesting and something important. Friends, let us say a person X is there. He went to the US in 2013-14. Earned income and received. Both are in US only. What kind of income it is? Foreign income. Assume for a second X is ROR. Is it taxable? Yes. Then ROR told Indian government, it is taxable, please take tax. Government told, I will give exemption, don't pay tax. Government is telling, I will give exemption, don't pay tax. That could be one possibility. Second possibility, government is telling, you pay tax in US, don't pay tax in India. Go, enjoy. Possible, sir? Possible. Second case is highly possible. First case may not be possible. Second case is highly possible, no? Now, the point is, 13-14 earned the income, which is technically a foreign income, on which was not taxable earlier, or it was taxed only in foreign, but it was not taxed in India. Correct? No, sir. Say something. Not taxed in India. Now tell me, sir, please concentrate. In 15-16, he brought that to India. He has earned some 20 lakhs, boss. That 20 lakhs he brought to India in 15-16. Can government now tell, that time when you earned, you didn't pay tax. Now you are bringing to India, please pay tax. Then we will tell, at that time when I earned, I told you to take tax. You only told, no problem, don't pay tax, you sleep. Now I am telling, I am bringing to India, no? Now you sleep. At that time you kept quiet. Now I'll keep quiet. Correct, my dear friends? Everyone, sir? So this language is what you know. It uses the word past untaxed profits. Past what, sir? Untaxed profits. Past untaxed profits brought to India. I repeat again, what is the language? Past untaxed profits brought to India is not taxable for all. All means whether you are ROR, RNOR, NR, past untaxed profits bring to India, it is never taxable. It is never taxable. This is an important point. Past untaxed profits brought to India is never taxable whether you are ROR, RNOR or NR. Chalo, come on friends. ROR, what income is taxable? Global income. That is Indian as well as foreign. But he will not pay tax on one thing. That is, what is that one thing? Past untaxed profit brought to India. RNOR, Indian income. Foreign income also if it is business income controlled wholly or partly from India. Professional set up in India. NR, only Indian income. Only Indian income will be taxable. Correct, sir? Are we all clear with this concept, friends? Everybody, sir? Sure. Now, please concentrate. Something really important concept. Please see now. Before that, let me show one small chart which is there in your book also. If you don't have the book, please look at the board for today. So that module what I gave, summary module, it's very simple, sir. It will be a quick revision for you before the exam. So that summary book what I gave you, I personally suggest one day before exam, you will not have time to go through entire books. It's impossible. It's next to impossible to study some 500-600 pages before exam. It's quite impossible. In a 24 hours day what we have, studying 500-600 pages is not so simple. So I gave a crisp book. Just take those books, it will be easy for you. Come on. Look at this concept. Please look at this concept. Income received in India. Income what, sir? Received in India by or on behalf of assessee. Received in India means what kind of income? Indian income. What will happen? Yes, yes, yes means what? Taxable for all the three. Correct? Second one. Income deemed to be received in India. Deemed to be received means obviously what, sir? Taxable for all the three. Accruing arise in India. Taxable for all the three. Deemed to occur in India. Taxable for all the three. Income which accrues or arise outside India or received where, sir? Outside India. What will happen? Yes. NOR? No, no. Correct, sir? Yes or no? But a small point here, income which occurs or arise outside India and also it is where received outside India. But if anything is in India, it will become what income again? Indian income. Correct? No. Accrue and receive both should be where? Outside India. If anything is in India, what income we call it as? If anything is in India, what do we call? Indian income. Both are in India, Indian income. Both outside India, foreign income. Correct? No, sir. See now. Income accrues or arise outside India from a business controlled or professional setup in India. ROR, yes. RNOR also, yes. NR, no. Correct? No, sir. I already told RNOR is taxed on foreign income only in two cases. Number one, business income controlled wholly or partly from India. Professional setup in India. Past untaxed profits brought to India. Past what, sir? Untaxed profits brought to India. Past profits brought to India is not taxable for any of those cases. Are we clear with this, sir? Everybody, friends? Say something, please. Come on. So what is Indian income? Income which is accrued, received, deemed to receive, deemed to occur as in India. Foreign income, accrued and received both where? Outside India. Indian income is taxable for ROR, RNOR, NR. Foreign income is taxable only for ROR. RNOR also if it is business income controlled wholly or partly from India. Professional set up in India. Does it make sense, friends? Are we all clear with this concept? Completely, my dear friends. Come on. Now please concentrate. One important points I will tell. Friends, Indian income means what? Income accrued or received, or what is the third word? Deemed to be received. Deemed means what? Even though it is not actual, we are deeming it. Even though it is not actual, we are deeming it. Means deeming fiction. Where deeming fiction means as if we are treating like that. For example, if we say someone, you are a mental person. He is not mental actually. He is telling I am not mental. I am telling you are deemed to be mental. What will happen then? Even though he is not mental, it is decided that he is mental. That's why we have a word called deemed SSC. Agent of non-resident. Is agent responsible for non-resident? No. He is telling, अरे वो कौन है मैं कौन हूँ बताना मेरे को. He is a different fellow. I am a different fellow. We are telling, even though you both are different, you are related to him. So you are deemed to be an assessee, even though you are not an assessee. Deemed. Getting this word, sir? Everyone, sir? Now, example, simple examples here. When you tell your parents that I want to study seriously, I'll not waste my time, I'll go to bedroom, lock my door and study. When you go inside your bedroom, lock your door, it is deemed as if you are studying, irrespective of what you are doing inside. Correct? No, sir. That's what your parents think. And my students will always study. Correct? No, sir. They are saying, study. Exams are coming very close. Hello. Come on. Deemed to be received. So deemed to be received case is given by section 7. Section 7 talks about incomes deemed to be received in India. There are basically 3-4 points in this. In a simple language, I'll give you this concept. Employer contribution to Provident Fund. I'm sure most of you know that Provident Fund is like a saving scheme where employee will contribute, employer will make a matching contribution. Correct, sir? This also is there in your law syllabus in Employees Provident Fund, Miscellaneous Provisions Act 1952. Correct? See now. Employer's contribution to Provident Fund more than 12% of salary. That means what? Let us say if employee's salary is 1 lakh. Employee's salary is 1 lakh. Employer contributed 15,000 to Provident Fund. Means how much percent? 15%. What is taxable? More than 12% is taxable. Means how much is taxable? 3,000 is taxable. Correct, sir? Everyone? Sir, there is employer. Employer is giving salary to employee 1 lakh. That 1 lakh is anyways taxable, salary only. But apart from that salary, beyond that salary, he is also giving 15% to Provident Fund. What will happen? 3% becomes taxable. Because more than 12% becomes taxable. Correct, sir? Say something. And moreover, sir, when we put money in Provident Fund, we get interest on that. Like how when we put in a bank, we get interest. When we put in Provident Fund also, we get interest. And law says, interest in excess of 9.5% is taxable. That means what? If you put the money in Provident Fund, if you get interest of 11%, 1.5% will become taxable. If you get interest of 14%, 4.5% becomes taxable. If you get 12%, 2.5% becomes taxable. Are we getting it, friends? Is that point getting to our mind very clearly, sir? Completely, my dear friends. Come on, see now. The third point, sir, it talks about transfer from URPF to RPF. Sir, URPF means unrecognized provident fund. RPF is recognized provident fund. Who will recognize that? Provident fund is normally recognized by Commissioner of Income Tax. Commissioner of Income Tax. Sir, please listen. Recognized provident fund is nothing but the provident fund recognized by Commissioner of Income Tax. Commissioner of Income Tax. Unrecognized provident fund is not recognized by Commissioner of Income Tax. If you transfer your amount from unrecognized to recognized, even that becomes what? Taxable. Even that becomes what, sir? Taxable. The last point what we have is, sir, employer contribution to pension scheme. Employer contribution to pension scheme of central government. I repeat again, employer's contribution to pension scheme of central government. What scheme, sir? Pension scheme of central government. In fact, there was a section called IPCC which talks about pension scheme of central government. Anyways, that will talk in deductions topic. Don't worry. Yeah? Come on. Tell me, sir. What are 4 points? First one. Employer's contribution to provident fund. Next. Interest in excess of 9.5%. Next, transfer from URPF to RPF. Then, employer's contribution to pension scheme of central government. Correct? No, sir. Shall I repeat again? What do we have? First one, employer's contribution provident fund more than 12% of salary. Then, interest in excess of 9.5%. Transfer from URPF to RPF. Employer's contribution to pension scheme of central government. Clear, friends? These all will come under what, sir? Incomes deemed to be received in India. Even though they are received outside, still they are deemed to be received in India. Are we clear with that? Chalo. Friends, for ROR, Indian income, foreign income, global income is taxable. NR, only Indian income. RNOR, Indian income as well as foreign income. If it is business income controlled from India. Profession is set up in India. Correct, sir? Everyone. Now tell me, sir. Now tell me, what is Indian income? Income which is accrued or received or deemed to be received. What I done just now? What is the last one? Income deemed to accrue or arise in India. This all is given, my dear friends, in section 9. Section 9 talks about income deemed to accrue or arise in India. Even though it is accrued and received outside, it is still deemed to be received in India. Let's look at that cases. Come on, please concentrate here. Sir, in a simple language I created the notes. Please look at it. Section 9. Income deemed to accrue or arise in India. Number 1 talks about income from what, sir? Business connection in India. That means there is a connection, there is a source which is triggered in India. Where income tax law says, if there is a non-resident, he has some agent. And because of agent, if non-resident is getting some business in India, Because of the agent, non-resident is getting what? Business in India. Then we say that non-resident has what connection in India? Business connection in India. What connection, sir? Business connection in India. Getting it, friends? Everyone? Next point says, please see like this: income from any property. What is the language? Property, asset, or source situated in India. That means what? That means what? Simple language. If a person is in China, he has one house in India. He has one house in India. Tenant is transferring the rent online to the Chinese person. It is called as what income? For a simple reason, because source is in India, property is in India. Are you correct? No, sir? Everyone, sir? Come on, sit down. Next. Income from transfer of capital situated where, sir? In India. Means if you sold an asset which is in where? In India. For a simple example, how does it looks like? Let's say for a second, there is a person X. He is in US. There is a person Y who is in UK. X is having one house in India. He sold that house to Y who is in UK. Seller is outside. Buyer is outside. Transaction happened outside. Payment happened outside. But it is still called as Indian income. Why? Property is in India. Source is in India. Correct? No, sir. This income is deemed to occur as where? In India. Deemed to occur as where? In India. Next line you see, my dear friends. Next line goes like this. Income under the head what, sir? Salaries. Income under the head salaries. If service rendered in India, if you render service in India, what will happen? What do you call it, sir? Indian income. Let's say salary, service rendered outside India, salary received in India. Again, what do you call it? Indian income. If accrued in India or received in India, what do you call it? Indian income. Both are in India, Indian income. Both are outside India, foreign income. Correct, my dear friends? Everyone, sir? Please say something. Now, next one, an interesting point. Salary paid by government of India to an Indian citizen or an Indian national. Indian citizen or national for service rendered where, sir? Outside India. If government of India pays salary to an Indian citizen working outside India. When we are telling working outside India, means accrued where? Outside India. Received where? Outside India. Still we call it as Indian income because it is paid by government of India. To what citizen? Indian citizen. Practical example, ambassadors, foreign embassies, embassies, foreign diplomats. Correct, my dear friends? In all those cases, salary paid by government to an Indian citizen or national for service rendered where? Outside India. Even that is regarded as what income? Indian income. It is deemed to occur as where, sir? In India. Deemed to occur as in India. Are we clear with that point? Everybody, sir? Come on. Next one. Dividend paid by Indian company where, sir? Outside India. Now one small point here on this. If there is an Indian company, if there is what, sir? Indian company. It is paying dividend to the shareholder. Dividend to the shareholder. Friends, dividend paid by Indian company to the shareholders is exempt in the hands of shareholders under section 1034. Under section 1034. Why it is exempt? Why it is not taxable? Because Indian company is going to pay dividend distribution tax or corporate dividend tax under section 1150 at some special percentage, which I'll discuss with you later. Okay? Chalo. Dividend paid by Indian company is exempt in the hands of shareholder. Under which section? 1034. Why? Company is paying dividend distribution tax. Company is paying what tax? Dividend distribution tax. Are you getting this, friends? Everybody, sir? Please say something. So if an Indian company pays dividend to the shareholder, it is exempt under section 1034 since company pays the dividend distribution tax or corporate dividend tax under section 1150 at some special rate. What rates or not we'll discuss later. Okay, guys? Everyone? Sure. Next point, sir. In short, I call this points as IRF. I refers to interest. R refers to royalty. F refers to fees for technical services. In a shortcut, I will teach all the 3 points to you. IRF, interest, royalty, fees for technical services. Please consider it, sir. If IRF is paid by government of India, straight answer, it is always Indian income. If it paid by government of India, is always what's Indian income. It is paid by others. Others means other than government of India. Then it is Indian income if it is used for business in India or source in India. I repeat again, interest, royalty, technical fees, if it is paid by government of India, it is always what income? Indian income. If it is paid by other than government of India, it is Indian income if it is for business in India or sources in India. When I use that word business in India or source in India, what does that symbolize? Something interesting. Please concentrate. Let us take one small example on this topic and become more perfect. Come on, see now. Friends, let's say for a second, there is a person called Mr. Bahubali. He is in US. He want to construct one hotel. He want to construct one hotel in India. In a place named as Mahishmati Kingdom. Now, Bahubali is where, sir? US. He want to construct one hotel where, sir? In India. And he wanted to get the design of this hotel done from one top architect in the world. He want to get one design done from top architect in the world. Top architect in the world, his name is, everybody knows, Kattappa. Very good. His name is Kattappa and he is sitting in Singapore. Okay. Bahubali is in US, Kattappa is in Singapore and is a top architect in the world. Okay, my dear friends, now listen. Bahubali went to Singapore. He got the design of hotel done for Indian purpose. He got the design done. He got a design done in Singapore and he paid him 30 lakhs. Understood, sir? Please, now tell me. Bahubali went to Singapore to meet Kattappa and he got the design done and he paid 30 lakhs. Now tell me, it is accrued where? Accrued where? Outside India. Received where? Outside India. What kind of income? Answer is Indian income. It is not called foreign income because source is in India. That what he has paid is nothing but called as fees for technical services only. That fees for technical services is paid for business in India or sources in India. Understood, my dear friends? Everybody, sir? So the whole logic is that even though it is accrued outside, even though received outside, still we are calling it as Indian income because sources in India or business is in India. Understood, sir? That means what? Kattappa is taxable. That is why he killed Bahubali. That's the reason why Kattappa is what, sir? Taxable. Are you getting it, friends? Everyone. Even the accrued outside, received outside, source is in India. Are we clear? Completely, friends? Speak out something. Sure. Come on. So what are things we learned so far, my dear friends? 6.1 and 6.6 talk about what condition? Basic and additional for individual. 6.2 and 6.6 HUF. 6.2 and 6.4 AOP, BY, AJP, others. 6.3 company. Section 7 incomes deemed to be received in India. Section 9 income deemed to accrue or arise in India. But there are some more points which I'll cover it up. There are some more points. Then we also covered section 5 scope of total income. Scope of total income. We spoke about it, sir. Everyone, say something, please. Come on. We'll hold on there. We will solve some problems. Then we'll get back to the balance concepts. There are a few more important amendments related to Vodafone and all, which are important. Where there's a concept of fair market value, 50% holding. There are some important points which are very important. I'll discuss that in detail. But let's solve some problems, then we'll come back. It'll be much better for us. Come on. Kindly share the books, please. Please share the books. Sharing is caring. Please share. Come on, look at the book. The first question. Brett Lee, an Australian cricket player, visits India for 100 days in every financial year. He is coming to India for how many days, sir? 100 days in every financial year. This has been his practice for the past 10 financial years. Means his last 10 years, every day is coming for how many days? 100 days. Find out his status for AY 16-17. This question came in exam for 4 marks. Please concentrate, sir. How do we calculate SI status? AY 16-17, PY 15-16. 4 years previous, 14-15, 13-14, 12-13, 11-12. How many days is there in previous year? 100 days. Last 4 years, 400 days. Can he satisfy the first basic condition? No. Can he satisfy second basic condition? Yes. That is what 60 and 365. So his status is Pakka R. If it is R, story will continue. NR, story is over. If it is R, story will continue means what we look at? Additional condition. For your kind information, whenever we talk about additional condition, for the sake of solving the problem, only for the sake of solving the problem, first we generally always look at second additional condition. If second is satisfied, then we look at first. If second is not satisfied, we will silently keep quiet. Because if second is not satisfied, first even though you are satisfied, there is no use. Because the condition is and, not or. Correct, sir? So generally for solving purpose, we always look at second additional condition but not first additional condition. Correct, my dear friends? Bolo dosto. Now what is second additional condition? He must be in India for 730 days or more during last 7 years preceding the previous year. When I tell preceding, it always means immediately preceding only. Correct, sir? Now tell me. Last 7 years means, the question has told, he is coming every year 100 days. Means last 7 years, how many days? When it is 700 days, can he satisfy 730? No. So can he become ordinarily resident? Do I need to look at the first additional condition? No. Answer becomes RNOR. Are you getting it, friends? Small thing but makes a difference. But in exam, how do we present? That's what I have to tell you now. In exam, when we present, sir, we split our answer into 3 paragraphs normally. First paragraph refers to concept or provision or section. Okay? Second paragraph, we should always take the interpretation. Interpretation of answer. Otherwise, question in light of the concept. Question in light of concept. Third paragraph will just give conclusion. Third paragraph will just give conclusion. Okay, guys? Everyone? Let's write one answer for the first question so that we'll get the perfect clarity on that. Whoever already knows also, please write down so you'll also revise once. Okay, let us write once. Once if you write, presentation happiness I will also have, you'll also have. Let's write one question at least. Other questions you'll understand very clearly. Okay, one question at least we'll write. Come on. Let's write together. First question. First question. We always start with provision as per section 6.1, comma. Sir, comma, full stop, and makes a huge difference. Punctuation marks also equally important. Please be careful. As per section 6.1, comma, an individual is said to be resident. An individual is said to be resident if he satisfies any of the basic condition. An individual is said to be resident if he satisfies any of the basic condition. Any of the basic condition. First one. Please write down. I am writing along with you. Please write down. He must be in India for a period of how many days? 182 days or 182 days or more during previous year. And or what is the second one? He must be in India for a period of, everybody write down please. Nobody should sit silently. Write down. He must be in India for a period of 60 days or more during previous year. Previous year you can use shortcut called PY. No problem. Marks will come. During previous year and what's 365 days or more during 4 years. See my language, sir. 4 years immediately preceding previous year. 4 years immediately preceding the previous year. Of course, immediately preceding the relevant previous year. Immediately preceding the previous year. Clear? Everyone? Sure. What condition? Repeat again. 182 days or more during previous year, or 60 days or more during previous year, and 365 days or more during 4 years preceding the previous year. Correct? Next. Read on. Further, an individual is said to be ordinarily resident. What resident? Ordinarily resident if he satisfies both additional conditions. One student asked me one time, sir, why always Income Tax Act uses the word individual, and they say again if he satisfies? Why they never use the word she? Why always he? What difference it makes, he or she? He covers both. He covers she covers he. Don't worry. If he satisfies both additional conditions. What is the first one? Control. Don't think too much. First one, he must be resident. He must be resident in at least 2 out of 10 previous years preceding the previous year. He must be resident in at least what, sir? In at least 2 out of 10 previous years preceding the previous year. And what is the second one, sir? Second one, he must be in India. He must be in India for a period of 730 days or more during 7 years. During 7 years preceding the previous year. During 7 years preceding the previous year. That's it. Is the answer over? First story is done. What is the first story? Concept. Now what do we do? Interpretation. Come on, right now. In the given case, Brett Lee visits India for how many days? 100 days every year. In the given case, Brett Lee visits India for 100 days every year. In the given case, Brett Lee visits India for 100 days every year. Accordingly, he can satisfy second basic condition. He can satisfy second basic condition, but he cannot satisfy both additional conditions together. But he cannot satisfy both additional conditions together. Correct? No, sir? Say something. Next paragraph. Hence, his residential status for assessment year 16-17 shall be resident but not ordinarily resident. Resident but not ordinarily resident. Resident but not ordinarily resident. Are we clear with this? Everybody, sir? Got the presentation? How do we write in the exam? How do we write the first? How do we split the answer? Provision or the provision or otherwise concept. Next, interpretation. Then conclusion. Write present properly. Marks will come for sure. Definitely marks will come. It's all about how much presentation we are giving in the exam. Clear? Come on, look at the next question. X 40 years is a what citizen? Indian citizen. Friends, one small important suggestion point, and in fact an important point which all of you have to keep in mind. Please listen here. Keep this point in mind always. Unless question says he is an Indian citizen. I repeat again. Unless question says he is an Indian citizen, you cannot assume he is an Indian citizen. That means if question is silent, we will not treat him as Indian citizen. Question must tell he is an Indian citizen. We can't assume he is an Indian citizen unless question specifically says. Are you getting this point, sir? Keep this point in mind always. Unless question says, we can't assume he is an Indian citizen. Question must specifically tell he is an Indian citizen. Make sense, guys? Everybody, sir? Come on, look at it. X 40 years, an Indian citizen, leaves India for the first time on October 10, 2013 for employment outside India. Means which financial year he went for employment? During 13-14 he went for employment outside India. Correct now, sir? Very good. Before October 10, he was never out of India since his birth. Once we tell he is never out of India since his birth, that means what? He can easily satisfy additional conditions. 730 or more in 7 years and 2 years resident out of 10 years. Say something. Yes. Now see the story. During 14-15 and 15-16, he comes to India for 152 days and 195 days respectively. Means 195 days is coming, and after 195 days what he will do? 195 days is coming. After 195 days what he will do? Go. That means what? He is an Indian citizen. Please observe. He is an Indian citizen. He is coming to India for temporary purpose, and temporary is technically called as visit. Correct? No, sir. That means what, sir? We have only one condition applicable, that is 182 days. This 60 and 365 what we have, this option is not available because he is an Indian citizen coming to India for what purpose? Visit. Correct, sir? Yes, sir. What did the question ask? Find out status for assessment year 16-17. What is previous year? 15-16. How many days he has come? 195 days. What is the answer then? Straight away answer will be ROR. Correct, no, sir? 182 satisfied. Additional satisfied because he is never out of India before October 10, 2013. Speak out something. Sir, here the exception point has come not because he went for employment. He didn't go for employment in 15-16, but because in 15-16 he has come to India for a visit. Correct, sir? In 15-16 he didn't go for employment. That year did he go? No. That year what did he do? He has come to India for visit. So exception is applied. Are you getting the concept, sir? Everyone? But other side of the coin, they ask one more question. Does it make a difference if he comes on October 10th? Sir, if he's coming on October 10th, what will be his stay in India? October 10th to 31st March? Sir, I'll tell you one small point, keep in mind. Number of days is coming to India is not relevant. What is relevant is number of days is coming to India during previous year. I repeat my line once again what I told. Number of days is coming to India is not relevant. Number of days is coming to India during previous year is relevant. Because we're only concerned with number of days in India during what, sir? Previous year. Are we concerned with total number of days? No. We're concerned only with what? Previous year. Tell me, how much it will be? October 22 days. Yeah? October 22. November 30. December 31. Jan 31. Feb 29. March 31. 174 days. The moment we say it is 174 days, he cannot satisfy basic condition. Answer becomes non-resident. Because there is no option called 60 and 365. Student can tell me, sir, 60 and 365 satisfied? No. But the answer is, that option is not there at all. For a simple reason, because he has come to India for what purpose? Visit during previous year. Once an Indian citizen comes to India for a visit during previous year, only one condition called 182 days or more. There is no option called 60 and 365. That's the concept. Are we all clear with this? Everybody, sir? Does it completely make sense? Totally, sir. Pakka? Did we get the problem totally, sir? So the first case, what is the answer then? ROR. Second, what will be the answer? NR. Because the concept of visit. Clear, my dear friends? Everybody? Let's look at one more small question. A very small question. With that, we'll close. Let me look at one more small question also. Third question. X was born in Pune. Wonderful. In which year? 1979. Later on, he migrated to Australia. Much more good. In December 2014. And took citizenship of that country from Jan 1st. That means what? He is what citizen? He is an Australian citizen. And question has never told whether he is an Indian citizen or not. Will you assume he is an Indian citizen? We should never ever assume. Question to specifically tell. Next. His parents were born in where? Nasik. Very good. In 1950 means what? After independence. Very good. And grandparents were born in Sydney. Before independence only. But they are born where? Sydney. Are they born and divided India? No. That means this fellow is not a POI. Other words, he is not a person of Indian origin. When do you call a person of Indian origin? He or his parents or his grandparents. Any of them were born in undivided India. Grandparents covers both mother side and father side. Otherwise maternal and paternal. See now. He comes to India on Feb 15, 2016. For what purpose? Visit. So what? So what? For a simple reason, because visit concept will apply when an Indian citizen or a person of Indian origin coming to India for visit, then only 180 to 635 is not there. 635 is not there. Now tell me, is he Indian citizen? No. Is he a person of Indian origin? No. Will exception apply? No. One sweet exception will not apply. He has two options called 182 or 60 and 365. Correct? No, sir. Say something, sir. Exception will not apply. Because exception will apply only and only for Indian citizen or a person of Indian origin. He is neither Indian citizen nor a person of Indian origin. So exception will not apply. Say something, please. Now, he has two options. Wonderful. He has come to India for a visit for how many days? 190 days. I already told we should not be carried away by number of days given in the problem. Number of days given in the problem is only and only to confuse you. I already told number of days is coming is not important. Number of days is coming in previous year is important. I repeat that line once again. Once again I will tell, please listen. Number of days is coming is not important. Number of days is coming in previous year is important. Correct? No, sir. Tell me now. And next he gave find out status for 1670 on the assumption that before 2014 he was present in India for at least 275 days every year. That means he can satisfy both additional conditions. Correct, sir? Now tell me, sir. He has come for 190. But will we be carried away by 190 days? No. Number of days is coming is not important. This is the 10th time I am telling this point. Number of days is coming is not important. Number of days is coming during previous year is important. In previous year, when did he come? Feb 15th. What is previous year? 31st March. 31st March, will we get over? No, sir. Say something, sir. So Feb 15th means February it will be how many days? 15 days. Leap year, no, 29 days. Plus 31 days. How many days? Straight away answer will be because he cannot satisfy any of the basic condition. But one point I should tell you, sir, if you are carried away by that word called 190, you will end up in telling he is an ROR. Once you end up in telling he is an ROR, his global income will become taxable. Once his global income will become taxable, he will start crying. Once he start crying, marks will not come. Attempt will go. Correct, my dear friends? In exam, you have to be as much careful as possible. I am repeating that line once again. We are not concerned with number of days is coming. We are concerned with number of days is coming during previous year. Exam, you have to be on the toes. Exam day should be an exam day. It should not be preparation for next exam. Be very, very careful. Clear, sir? Everyone? That's it. We'll stop there. Balance part will take forward tomorrow. Thank you.